the advocate wants to come and be part of our team, that says something.
You make it sound like the Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that one or two people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have two guys who are ahead of that and one knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left the Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette
I'm a writer for Bloomberg News for the global business team.
and Kim Basine
And I'm the U.S. luxury reporter at Bloomberg.
to find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the fifth most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW.
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
with violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music and their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution because we know that the more life that is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forests on the land that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sales to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in the case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got the Dow, the S&P, NASDAQ all lower right now. 2 hours to go until the closing bell on a Friday. What a week it has been, but right now stocks are struggling for direction after China intensified its sweeping regulatory crackdown on cryptocurrencies. Bitcoin, Ether, and other digital tokens tumbled in another blow to investor sentiment. The world's second largest economy said crypto-related transactions will now be considered illicit financial activity. Bitcoin tumbling today. Right now, Bitcoin down 6.1%, 41,993. Well, what about those larger concerns earlier in the week in terms of contagion from China? Anders Persson is Chief Investment Officer for Global Fixed Income at Nuveen.
I think our view is that that's unlikely to be sort of a broader risk contagion at this point, at least from a global market lens perspective. In our mind, it is primarily a Chinese contained issue, kind of primarily focused on the real estate space, of course, but also if we look at the counterparties, it's mostly Chinese government-owned banks.
After earnings, we've got Nike shares trading lower now, down 6.3%. Last night, Nike lowered its sales forecast as production and shipping delays hobbled the company's efforts to meet strong demand for shoes and athletic wear. The world's largest athletic wear company said sales this quarter may fall as factory closures in Vietnam prevent Nike from keeping up with consumer demand. Again, Nike shares right now, they are down 6.3%. Also after earnings, Progress Software Software surging now by 15.8%, and also reporting earnings last night. Costco wholesale shares, they are up by 3.1%. Again, recapping, we've got the 10-year at 1.45%, S&P lower now by 2 points, down about 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Don't say it. Don't even say it.
What, we made it?
Yeah, because we haven't.
No, we've got 3 hours to go.
Exactly. We haven't made it. Nothing has been made yet.
No, but yes, indeed, we are counting down to the last trading day of the week. China certainly front and center once again. Welcome, everybody. It is Friday, September 24th. Carol Masser, Tim Stenovic, live in our Interactive Brokers studio. We are streaming on YouTube.
Stock struggling for direction.
Yeah, well, it's that kind of a week, right? We saw selling on Monday. We've bounced back a bunch. And then we continue to see, like, okay, wait, should we be worried? Should we not?
Well, hey, if the S&P 500 finishes where it is right now, Carol, we're going to see a 5-day gain of 0.3%, which is shocking given what we saw on Monday.
Which is interesting. We'll have to see how the week ends up overall. All right, we're going to talk about stocks. We're going to talk about China intensifying its sweeping regulatory crackdown on cryptocurrencies. The crypto market definitely reacting and tumbling. We're all in on that. And we're also going to talk about Amazon's bevy of new products. Alexa, I'd like some new products.
Well, perfectly in time for the holiday shopping season. They're delivering.
Fingers crossed the supply chain
can
meet those demands. We're going to talk about that and a minute to think how to do your best work with so much going on. First up, though, let's get to the Market Drivers Report. Let's set the Business Week agenda. Here to do it with us, Vince Signorella, Global Macro Strategist at Bloomberg News, on the phone in White Plains. Dave Wilson, right here in our Interactive Brokers studio, stocks editor, of course, at Bloomberg News, the one and only Dave. Kick it off. As Tim said, the equity market's trying to figure things out here.
Yeah, and hasn't really gotten very far, but considering the fluctuations that we saw earlier in the week, you could argue that things are kind of stabilizing a bit here. You kind of got on the one hand, on the other hand story. On the one hand, you look at Costco Wholesale that had earnings out late yesterday. Those shares up about 3%. Carnival with earnings out today that went over pretty well, even though the company's still losing money and will be for some time.
But it's getting ships back out to sea, or at least is giving you a date for when it sees and increasing that exposure.
Absolutely, and sort of a continuation of yesterday when they were really talking about, sort of where the plan is going. And, the cruise line owner up 2.5%. The flip side is Nike, down more than 6%, dragging down retailers, think Foot Locker. And it's all about, supplies. And it's not just a matter of getting them here, because that's an issue, and it is for a whole lot of other companies. They also have, factories that are shut down in Vietnam, and that's where they get a lot of their merchandise. So, first of all, they don't necessarily have the stuff that people want. And secondly, even if they do, they can't necessarily get it where it needs to be in order to sell it. So, put it all together, Nike definitely weighing on the S&P 500, biggest loss in the index.
Interesting to see shares of Adidas, ADRs of Adidas down.
You mean Adidas?
Adidas. Did I, Adidas? I'm not a soccer player, so can I say Adidas, or do I have to say Adidas?
I say them both.
Vince Signorella, how do you guys say it?
I said Adidas my whole life, so it's going to be hard for me to change that.
If Matt Miller was here, he'd be like, Adidas. No doubt about it. Vince Signorella, make sense of this market. It's a wacky one. I do feel like if we're wondering about who is in charge globally right now, I think we can almost safely say China.
Yeah, I think so, but I think that this is a very unique opportunity. China's tried to crack down on technology before. They tried it with Facebook, they tried it with Google, and both of them turned out to be great buying opportunities after the dip. There's going to be the same.
Wait, are you saying it's the same about U.S. stocks, or are you saying it's the same about cryptocurrency?
I think it's the same about cryptocurrencies. I mean, and potentially U.S. stocks as well, because if U.S. stocks fall based on what China says, I would argue the same thing, that these are buying opportunities. Not that I'm a perma bull, and you guys know I never am. But, it seems to me, and I go back to the Kissinger days, that China is cracking down on a variety of industries in order to suppress some sort of social media that's going on in-house that we are obviously not front and center and aware of. All of these shots across the bow that they're doing, and it seems to us sort of random. The way that President Xi thinks he's a brilliant man, it's not random. There's a plan here to get a greater control on the economy and a greater control on things because China's economy is slowing down. And the last thing the Communist Party can do, the minority party, which most people don't realize, is to let things get out of control. So they're really trying to hold on to the ship and keep it straight and to make sure the economy grows at a level that they can produce to keep the population happy.
Right, spread it around the masses. Larry Summers, former Treasury Secretary, had an interesting conversation with David Weston. They talked a little bit about that, and we're hearing consistently that there has to be probably a recalibration when it comes to Chinese growth. And David, we'll be thinking about how that impacts the world globally.
Yeah, absolutely. I mean, what is it? Common prosperity, the phrase that pays in China.
I got
these
the
days.
T-shirt and I got the bumper sticker.
Yeah, absolutely. We've seen it play out in a number of industries. Now we're seeing it play out with crypto. We should note that the central bank previously prevented commercial banks in the on the mainland from getting involved in the market. So what happened? The business moved offshore, and now they're going after the offshore business. In essence, we'll see how that unfolds.
Vince, jump on in here and just give us the week that was, given what we saw on Monday. And we saw the sell-off where the narrative was the idea that this was about Evergrande, it was about China, and then the rally that we saw on Wednesday and Thursday. I mean, how would you sum it up and whether there is actually contagion risk from Evergrande? Market's kind of telling us there's not.
Well, absolutely. I mean, initially, obviously, they did with the big sell-off, but then there were a lot of stories about China ring-fencing the company, potentially creating 3 state companies to basically, 3 bad banks kind of concept, if you will, to absorb the losses. And China basically made remarks that this was going to basically stay in-house, if you will. So that's what, after that field took the market, we rallied. And I think it goes back to, just what I was saying. As much as China is in control in terms of what they're doing and causing the markets to rattle, the world is a lot bigger than China. And when you look at cryptocurrency and the talk that blockchain is going to become Internet 2.0, and if they don't participate in that, they're going to fall behind drastically in technology. They're not going to be the power they are if they fall behind technologically.
Right.
I'm as tired as the market is today.
Right.
And so, how much they can push this, I just don't know.
Yeah, we could see a separation in terms of procedures forward when it comes to crypto. All right, Vince Ignorella, thank you so much, global macro strategist at Bloomberg News. Dave Wilson is our stocks editor at Bloomberg News here in our Interactive Brokers studio. He'll be along later on with his chart of the day. You are listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. We are expected to hear from President Biden hosting the first ever in-person Quad Leaders Summit with the Prime Ministers of Australia, India, and Japan. It is just getting underway. He is there in Washington. Let's take you there live.
This grouping of Democratic partners who share a worldview and have a common vision for the future, coming together to take on key challenges of our age, from COVID to climate to emerging technologies. It embodies an approach I spoke of at the UN earlier this week. When we met 6 months ago, we made concrete commitments to advance our shared and positive agenda for a free and open Indo-Pacific. Today, I'm proud to say that we're making excellent progress. Our vaccine initiative is on track to produce an additional 1 billion doses of vaccine in India to boost global supply. We're taking action on climate change with new partnership toward a zero emissions shipping. And today, we're also launching a new Quad Fellowship for students from each of our Quad countries to pursue advanced degrees in leading STEM programs here in the United States. It represents an investment in the leaders, innovators, and pioneers of tomorrow. In sum, we're 4 major democracies with a long history of cooperation. We know how to get things done, and we are up to the challenge. And I'm looking forward to our discussion today, and I thank you. And now I yield to my friend from India. Rashtrapati Biden.
All right, you have been listening to President Biden sending it over to the Prime Minister, of course, Prime Minister Modi of India. It is a first ever in-person Quad Leaders Summit. We've talked about this week. That Quad includes the United States, Australia, and India, also Japan. Those prime ministers and leaders are also there in the East Room of the White House. So we'll continue to do it. This is part of, Tim, as geopolitically alliances are changing in terms of what are the priorities for different nations.
Well, let's get into it with Alex Wayne, White House editor at Bloomberg News, joining us on the phone from Washington, D.C. Alex, just give us some context regarding the Quad and really how important this is when it comes to everything that Biden is trying to do right now, whether that's the economic recovery here in the U.S., the vaccination effort, and, of course, his $3.5 trillion domestic agenda.
Yeah, I would say, just today, this summit is probably only the third or fourth most important thing happening at the White House.
Just today. Okay, well, hey, that's helpful.
Big announcement this morning on COVID-19 booster shots. The president is really scrambling to deal with this situation on the Texas border with the Haitian migrants, and as you mentioned, his economic agenda is it risks foundering in Congress unless he can pull out some magic in negotiations with members of his own party. And then there's the Quad. Here he is meeting with these folks, trying to realign American foreign policy and point it more squarely at the Pacific region, the Indo-Pacific region.
And by that, do you mean China?
Yeah, I totally mean China. The White House doesn't explicitly like to say China, that this is about China. They're really cagey about that. They dodge questions about it. They insist it's not really about China. It's totally about China. Like, let's just be frank about that. He's trying to set up stronger alliances all around China, India, Australia, Japan. And it's about countering what a lot of these countries, like Australia, see as a rising threat in the South Pacific. Australia, backed out of this deal with the French to buy diesel submarines because they decided that China is becoming such a threat to them that they need nuclear submarines from the United States. Caused a big really international incident last week that we're still recovering from with the French. So yes, this is definitely about China.
And timely so, considering the week, because it does feel like we've been talking a lot about China. Having said that, Tim and I have been talking a lot about, just like you, all the things going on in D.C.
Yeah, if there's one thing happening that's with markets right now, it is China, and that's what investors are focused on. So what should investors be watching from this meeting with the Quad when they're thinking about the context of Evergrande and China's crackdown on crypto?
Gosh.
Or how Washington reacts to it,
Yeah, the Evergrande situation, I think, is not really squarely on a front burner here in Washington. I think probably a lot of folks in Washington, outside of the financial regulators, are still they've even heard of the company. They're still trying to figure out what this means for the U.S. economy and whether there should be any policy response to it. I think at this point, nobody really thinks that the Congress or the White House need to do anything in particular about a real estate company in China. But we'll see what happens as this company continues to crumble. I think if we see the Chinese economy really start to take a hit from what's going on with Evergrande, that would force some sort of response in Washington because, of course, our economies are so interconnected.
Hey, Alex, just real quickly, one question. As you said, this is just one of three or so more important issues that are coming out of the White House this morning for our global investment audience. What really matters? Is it the infrastructure plan, the spending plan that the Biden administration and President Biden is trying to get through? What's really of importance, do you think, here that could potentially impact how investors think, how the markets play out?
the biggest thing going on, I think for both Biden and for investors, is what happens with his economic agenda. If Democrats can't all get on the same page and pass these two big pieces of legislation, it is a serious blow to Joe Biden's entire presidency. And it has repercussions for Democratic control of Congress next year, and for Joe Biden's own reelection should he choose to run for reelection. So I think that's what investors probably need to keep their eye on out of all of these things.
All right, well, we're going to have to leave it there. Alex Wayne, White House editor at Bloomberg News, joining us on the phone from Washington, D.C. Alex, thanks so much for taking the time. Let's do the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
All right, Tim, Today's number is 102. China has listed 102 ways the United States has interfered in Hong Kong since mass anti-government protests gripped the city back in 2019 as the world's largest economies continue to clash on everything from trade to human rights and the coronavirus origins. Examples included senators meeting with Hong Kong protesters and statements by former U.S. Secretary of State Michael Pompeo condemning the arrest of activists under the security law. The document represents just one of the major barriers to the U.S. and China repairing diplomatic relations. This is where we are on that relationship, and China really is a theme today.
It certainly is, especially when it comes to cryptocurrencies. Waking up early this morning and seeing the news that Bitcoin and Ether, or not Ethereum necessarily, tumbling as China intensifies its crackdown on crypto. Shares, or I should say the price of Bitcoin, lower right now, but off of lows reached earlier today. It's just hovering around $42,140. Joining us now to take us into it is Bloomberg News cross-asset reporter, also my co-host on Bloomberg Quick Take Stock. It airs Monday through Friday at noon Wall Street time. Katie Greifeld. Katie, what is happening with the crackdown on crypto in China?
So it's not necessarily new news. I mean, this is just China continuing to tighten the screws on crypto, which they have done for years. I mean, if you think back to 2017, China actually outlawed crypto exchanges. So this has been going on for years. And what they're doing today, I mean, obviously after they did that, traders have been finding their way onto offshore exchanges, onto over-the-counter venues. They're really trying to stamp that out once and for all, in addition to banning mining. So
kind of like, all right, we didn't like you, now we really don't like you, we're done.
Yeah, basically. And I mean, think about the past few months, how China has been cracking down across industries. This kind of fits into that mold, but what they're really trying to do is to finally put an end to sort of their citizens trading on offshore exchanges. We'll see if that's successful.
It's like we've seen this story play out before, and it doesn't seem to really tamper the enthusiasm globally for cryptocurrencies.
Yeah, I mean, you can see that in the price of Bitcoin. I mean, we fell as much as 9%. That's a normal day.
I was just going to say, when it comes to Bitcoin and its volatility, like 9%, meh.
I know. I mean, you think back
especially since May.
I think it was the beginning of last week, we fell 17% in one day. So 9%, pretty much a snooze. And I mean, already we're back to, losses are at 5.7% now. So those losses have been paired. That being said, we are heading into the weekend. Crypto is unique in many ways, but also because it also trades all weekend long. It tends to be a very, very volatile time for crypto because there's not a lot of volume.
Right.
So, we'll see what we walk into on Monday.
Well, and it's interesting. Was it Vince who said it? Whether or not we are going to maybe move forward and continue to have divisions about who embraces what, whether it's certain technologies or you have the U.S. working with a certain bunch of allies on certain tech platforms, be it crypto and other, and China kind of doing its own thing. And is China left behind ultimately, or do they really care because they've got 1 billion plus people?
We'll see.
Right, exactly.
We'll see, because, it's interesting that every time you do get headlines like this, it somehow always turns into a bullish argument for crypto, that the hole that China's leaving behind, someone will step up to fill it. Even today you heard from a U.S. Senator, Pat Toomey, saying that this is a big opportunity for the U.S., but it also depends if the U.S. wants to fill that void, what the U.S. wants to be when it comes to crypto, since obviously regulators in the U.S. have been tightening the screws or talking about tightening the screws in their own way.
But what does cracking down on crypto actually mean for people who use it? Because aren't there ways to get around that no matter where you are in the world? if you really want to use a service that's banned in China, like when I was in China, maybe it's different now. I was able to use Google and check my Gmail, even though it was blocked, by using a VPN.
Yeah, that's the thing. And I mean, that's been the case with China's crackdown. Again, they banned exchanges in 2017. People just went offshore. So that's, I think, why, I mean, you're seeing Bitcoin pretty much shrug this off, that if people really want to find ways to trade crypto, they're going to find those ways.
And I also do wonder, because I feel like in some regards, China takes these moves and then maybe is very extreme and then backtracks a little bit, perhaps, depending on which way the winds are blowing. And who knows, right?
Mm-hmm.
If at some point they relax a little bit. I don't know.
Yeah, I mean, I think if we hadn't just lived through the past several months that we've lived through with China, you know, targeting their tech industry, their online education industry, their gaming industry,
right.
The fact that now they're falling down heavily again on the crypto industry, again, it just fits into a pattern of China really trying to take back control across the board.
Right.
So I think that, you know, in terms of people trying to turn this into a bullish argument, that would have been a talking point had we not just seen the past several months.
I also do wonder if it's also has something to do with a way to kind of hide wealth, right?
Yeah.
I mean, which is what this common prosperity is all about, is spreading the wealth more evenly around the country and taking steps in China to do just that. And I wonder if, you know, that's what Beijing officials are thinking. You know, this is another way to hide Chinese wealth.
Well, that is what led them to ban exchanges
Initially,
in 2017.
right? Yeah,
exactly.
that's what
That
I
people
thought.
were using it as a way to get money out of the country. You also had China's currency, the yuan, depreciating at that time. They wanted that money to stay in China. We know that that is a sore point for them, and I wouldn't be surprised if that was some of the thinking behind this.
Hey, I just want to end with what you said about Senator Pat Toomey, the top Republican on the Senate Banking Committee, saying that China's crackdown on cryptocurrency transaction, quote, is a big opportunity for the U.S.
Mm-hmm.
That's a big deal that he said
Yeah.
that. What kind of opportunity?
I mean, you saw something similar when China cracked down on mining earlier this summer, tried to really stamp out mining in China. And I mean, you saw a lot of miners shipped abroad, both, I mean, to the US, but also elsewhere around the world. I think that's sort of the idea that he's alluding to. But again, the US, I feel like it's still figuring out how it wants to approach cryptocurrency. And I mean, if you look at Biden's nominee for the office of the comptroller of the currency,
Which just came out this week.
Just came out this week. That is a big role, and we're talking about Saleh Amarova. I hope I pronounced her name right. I mean, she's argued in the past that cryptocurrencies threaten to destabilize the economy. They're vulnerable to abuse by private firms. That doesn't sound like a person who's really ready to embrace crypto with open arms.
Not definitely all in there. But it could give, you know, if Beijing backs off of this, it could give an opportunity to U.S. officials, European officials, to really set the terms in terms of regulatory oversight or how things operate, right, to set the rules to some extent.
Yeah, I mean, one of the big questions overhanging the industry right now is, do other countries take a page out of China's book and also try to
back off or lean in more?
Yeah.
But like, who cares if rules say one thing in one country and a different thing in another country?
I mean, you see that in El Salvador. It's legal tender in El Salvador and in China.
And I feel like rules and crypto just don't kind of come together.
All right, that's what the crypto's, you know, established, so there aren't rules.
I know, exactly. All right, to be continued. We'll have more on this, of course, always, and some later in our broadcast. Katie Greifeld, thank you so much. Bloomberg News cross-asset reporter, Bloomberg Quick Take co-anchor here on Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
The news flow is fast and furious.
It's a fire hose. But
how's
that's what happens
everybody
in the
doing?
fall. That's what happens in the fall.
I know.
You know,
but the summer was busy too.
The summer was busy, but the new iPhone's out today, which I think to a lot of people means, okay, this is the official start of the holiday shopping season, because that's certainly the way that Apple thinks about it.
You want to know what I'm focused on?
What?
My eggplant pizza that I'm going to have at like 7:30
Is this
tonight.
Friday tradition in the
Yes,
Master
it is.
household?
It is.
Weird. We haven't gotten our invitation yet.
Stay tuned. We're also
She
going
didn't say anything when I said that. It's so weird.
Crickets. No, love you, Tim. We're going to talk about the latest on COVID and the vaccine and the boosters, because we did get some news today. So we'll check in with Dr. Ian Lustbader in just a moment.
In the meantime, let's get a check on the latest with the trading. I love you too. Charlie Pellet, take it away.
All right, here's what's going on. Let's get back to the news, because there is a lot going on. I love you guys as well. Looking ahead to Sushi Friday night of the Pellet household. We've got the Dow down. We've got NASDAQ down. S&P, yep, that just moved lower as well. Been that kind of a day. Wobble, baby, wobble, with the S&P now down by just about half a point here. Stocks struggling for direction after China intensified its sweeping regulatory crackdown on cryptocurrencies. Bitcoin tumbling, Ether, other digital tokens lower as well. A lot of the crypto stocks declining. Right now, Bitcoin down now by 5.7%, 42,153 on Bitcoin. Right to the numbers, S&P unchanged. We've got the Dow down 5, down less than 0.1%. NASDAQ down 34, drop there of 0.2%. Your 10-year down 8/30 seconds. 10-year yield did see a 146 print moments ago, 1.45% right now on the 10-year. Gold up 0.3%, 17.47 the ounce, and crude West Texas Intermediate up just about 1%, 73.99 a barrel. Lots going on. The U.S. will start giving COVID-19 booster shots to millions of Americans, a milestone in the nation's fight against the pandemic. CDC adopting the use of boosters for people at high risk of contracting or falling seriously ill. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
Well, at the end of the day, we're going to go with the CDC guidance that came out late last night. And that essentially boils down to, if you're over the age of 65, you're eligible for a booster. If you have an underlying medical condition and you're 18 and over, you can get a booster. And if you're in an occupation that puts you at increased risk of coming in contact with individuals who might be COVID-19 positive, for example, hospital workers, long-term care facility workers, you're also eligible for a booster.
Dr. Pekosh with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among the vaccine stocks that we follow, Pfizer down 0.5%. Its German partner BioNTech, its ADRs down 4.1%. AstraZeneca's ADRs up 1.5%. Moderna down now by 5%, and J&J Johnson & Johnson down 0.3%. Briefly after earnings, Nike down 6.2%. S&P now higher by half a point. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I love you too, Charlie Pellet.
Aw. Didn't we cover this in training?
Yeah, I know. HR is calling. Okay. A lot going on. President Biden, busy day, as we heard from our Alex Wayne, saying earlier 60 million Americans who got the Pfizer-BioNTech vaccine will soon be able to get a booster shot after one of his top health officials overruled an advisory panel to expand eligibility. I would love to have been a fly on the wall in terms of once, the advisory panels came out, and then Walensky came out and said, yeah, we're going to
Meanwhile, you got the millions of folks who got the J&J vaccine being like, hey, what about me?
Hello?
What about us?
Remember me?
Yeah.
All right, so let's get to it. Our daily stuff on COVID, the vaccine, the virus, the spread, the ups and downs. Dr. Ian Lustbader in for his weekly check with us, clinical professor of medicine at NYU Langone, on the phone in New York. Dr. Lustbader, love you too. Still can't come over for pizza. How are you?
Oh, great, Carol. Thanks. Happy Friday, and thank you for the extended invitation. At some point, I will be happy to take you up on that.
Yeah, you and me both, Doctor.
And Charlie will have a lot to talk about.
We will. All right, so help me with boosters. My big question is, who should get a booster? at this point, in your view?
So, as Dr. Pekhash alluded to and spoke to, you can actually listen to the committee meetings. They are on YouTube, and it's a rather long, over an hour, kind of winding discussion about the pros and cons and review of the data, with surprisingly a number of technical issues where people dropped out and they weren't muted. It was really almost amusing, like a Zoom meeting.
Is this
with
an SNL thing that could be coming? Or
it could be. But at the end of the day, the feeling was based on sort of risks and benefits at this point, that the groups that would stand to gain the most benefit from a third booster shot really exactly are those over 65, underlying medical conditions, and that has sort of a broad range. Frontline healthcare workers who are certainly exposed. As we said in past weeks, almost anyone can really walk into a pharmacy and get it. The question is, will it benefit them? And I think the conclusion of the committee at this point was, because there are some rare risks and a low level of complications from the vaccine, that they, at this point, without more data, really wanted to limit that to the older age group. And by and large, we know that over 65, almost 85% of people over 65 in the U.S. have had 2 shots. Right. So that's encouraging.
So, Dr. Lustbader, what is the conversation that you're having right now with colleagues? Because frontline healthcare workers, like yourself, eligible for boosters.
It's interesting because there are already a number of people who are vaccine hesitant, and you see this, and we'll talk about it, with mandates and vaccine mandates. There are a number of big institutions, for example, in New York, that literally have thousands of nurses and aides and so forth that may not be allowed to show up to work because they are not getting vaccinated. Among the doctors and the colleagues I've spoken to, most people actually do plan to get a third booster shot. They feel their risk and benefit is significant.
Well, real quickly, because we only have about 40 seconds left here, or 30 seconds, I do wonder in the future, if boosters are expanded out to all, does it matter when we get them after our second shot, or perhaps the first shot in the case of J&J, assuming approval for the booster? Is that going to matter? Just quickly.
We have a lot of cellular immunity. Most antibodies do drop in the 6 to 8 month range. I think Moderna and J&J will be approved eventually for their booster shot. But I think you have 6 or 8 months of some protection. So, I don't think it's an immediate, urgent rush.
Okay, but a booster works if you get it 8 months later, 10 months later, 12 months later? Just quickly.
The ideal window is probably in the 8 to 10 month range, and it should work well.
All right. Thank you so much, Ian. I know it was a little bit
Always a pleasure.
It was a bit of a rapid fire. It's that kind of a day. Be well. Have a great weekend. Ian Lustbader, Dr. Ian Lustbader, clinical professor of medicine at NYU Langone Medical Center.
Great stuff, Dr. Lustbader.
I had a
Thanks
little
so
bit
much.
of caffeine. Can you tell?
Yeah, you did. Well, let's keep it going. Let's go down to Washington, D.C. and get a check of the latest world and national news. Nancy Lyons is there standing by. Hey there, Nancy.
Hey, Tim. Well, the House has voted 218 to 211 on a bill to cement abortion rights into law and protect health care providers of such services. It's in response to anti-abortion measures in Republican-controlled states. House Speaker Nancy Pelosi argued in favor, saying women deserve the right to choose.
We are standing on the side of women to defend their freedoms and to uphold this truth. Every woman, everywhere, has the constitutional right to basic reproductive health care.
Pelosi says voting for the measure was a vote for decency. Another Cuomo is facing allegations of sexual harassment. CNN anchor Chris Cuomo, Bloomberg's Ann Cates with the latest.
Following the downfall of former New York Governor Andrew Cuomo, his younger brother Chris is accused of inappropriately touching his former boss in 2005. Shelley Ross, who used to be Cuomo's producer at ABC News, says he gave her a bear hug and squeezed her buttocks at a going-away party for a colleague in New York. In an op-ed piece in the New York Times, Ross says Cuomo told her he could do this now that she was no longer his boss. She told him he couldn't and pushed him away. 1 hour after the incident, Cuomo sent an email telling her he was ashamed. Cuomo, asked to comment, says he apologized to her then, and he meant it. In Washington, Ann Cates, Bloomberg Radio.
An Iowa town is hoping to snag a Guinness World Record for serving the most pancakes ever in a single setting. Volunteers in Centerville, Iowa plan to churn out 26,000 pancakes during their annual Pancake Day celebration this weekend. A Missouri store currently holds the record with 13,000 pancakes. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Pancakes?
Yeah.
Do you like pancakes?
Yeah, it's like a Saturday or Sunday morning, kind of like some sort of tradition.
Chocolate chip?
No. You know, we try to deprive our kid
cauliflower.
of chocolate in
You
the
probably have
morning.
like cauliflower flour, right?
No, we just go normal. Yeah, we keep it easy.
Okay.
Yeah.
All right.
No like chickpea flour pancakes.
No, yeah. That sounds like
just straight up gluten.
sacrilegious.
Yeah.
Straight up gluten. Gluten for everybody. Okay, got a story for you on the Bloomberg. The presidents of New York City's teachers and principals unions urging Mayor Bill de Blasio of New York City to push back his Tuesday deadline for staff to be vaccinated against COVID-19, warning it will result in employee shortages that will imperil the safety of kids.
Okay, so the president of the UFT, United Federation of Teachers, also the president of the Council of Schools Supervisor and Administrators, said that they're urging the delay because the district has no plan to redeploy substitutes and central office employees to hundreds of schools with high absentee rates of educators and maintenance staff. Remember, this was a while back that the mayor announced this, and the reason was to give people time to go and get their shots.
So in other words, this deadline's been out there.
The deadline has been out there, absolutely.
Yeah.
Yeah, for a while.
Nothing like a deadline to get things done. We're seeing cities and states and industries, grapple with this. And, remember when we were saying, I wonder if vaccines will be mandated by schools or by companies. And here we are.
By Mayor Bill de Blasio is yes. So he announced the mandate back in late August.
Okay.
He did say earlier today that the city still has plenty of time to prepare, and he estimated that many who are still unvaccinated will get the shot by Monday's midnight deadline. The city, he said, can deploy thousands of substitute teachers and central education department staff if necessary.
About 87% of teachers and 80% of department employees were vaccinated as of Wednesday, according to a tweet from, the city's educational department or their press secretary or the union. So most people are doing it. So it just sounds like we got to get it up to 100%.
The clock is ticking.
Yeah.
But, 87% is pretty good for teachers.
I think so as well.
I'd
And
get
it's-
that last 13%.
It's these steps getting back to normal and letting especially kids get back to school and be in class. It's important.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got the Dow, the S&P both higher, NASDAQ on the minus side. Been that kind of a day. Stocks swinging between gains and losses. Perfect way to cap a turbulent week. Stocks right now struggling for direction after China intensified its sweeping regulatory crackdown on cryptocurrencies. Bitcoin is plunging today. Bitcoin down 5.7%, down at $42,169, down more than $2,500 on Bitcoin. In a blow to investor sentiment, China said crypto-related transactions will now be considered illicit financial activity. NASDAQ down 32, down 0.2%. S&P little changed, up 1 point. The Dow up by 11, also little changed. 10-year yield creeping up to 1.45%. Spot gold up 0.2%, $17.46 the ounce. West Texas Intermediate crude up 0.8%, $73.90 a barrel. Again, recapping Mixed Friday. S&P up 1 point, little changed. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. It is the Bloomberg Big Take today. It's also the new issue of Business Week magazine just out. It's about the Trump allies such as Steve Bannon bonding with Brazil's president and FY. Tim, it's a playbook we've seen before.
It certainly is. We've seen it from, well, President Trump himself. And joining us now is Joel Weber, editor at Bloomberg Business Week. He joins us on the remote from Brooklyn. Also joining us is Andrew Rosati, Latin American reporter for Bloomberg News. He joins us from Rio. Great to have both of you on with us. Hey, Joel, I want to start with you. What is the playbook that Bolsonaro's following specifically from President Trump right now? And it's important because, hey, there's an election coming up.
There's an election coming up, and just like the Trump playbook, you just immediately cast as much doubt on that election as you can. And he's already saying it's rigged, and we've got months to go until then. He's offered no actual evidence of that, but it is a tactic and one that you could probably draw a dotted line directly to Trump world, which, as Andrew's story goes into, is actually had really interesting links with Brazil. So this is not like, Trump and Bolsonaro having lunch together or anything like that. It's more of like all the machinery behind Trump and all the machinery behind Bolsonaro. Those gears are increasingly linked. So Andrew, take us into how the story came about.
Well, about 2 weeks ago, there was the Brazil version of CPAC was held in the capital Brasilia, and former Trump spokesperson Jason Miller was among the speakers there. And leaving Brazil, he was actually detained in an airport in links to an ongoing federal inquiry and the spread of fake news and misinformation here. He didn't speak to us, but from there we started digging into these ties. And what we found is that there's a long, close relationship between Steve Bannon and Bolsonaro's son, Eduardo, a congressman. And that relationship goes back to about 2018. And since then, we were told that they're in pretty constant contact. And a lot of the tactics we're seeing from Bolsonaro father is, direct links to what we've seen in the U.S., whether they're motorcycle rallies modeled off of Sturgis and pouring doubt on voting machines. These are all echoes of things we've seen in the U.S., and what we're hearing is it comes right from Trump world.
Well, it's fascinating.
So one of the things that...
Go ahead. Yeah, please, Joel.
Yeah, no, I was going to say, one of the things that I think is significant to the story, and this is something that we go into, is that, the Trump world kind of exporting of that Trumpism, it's kind of been something that's been attempted before, right, Andrew? And how did that pan out?
Well, yes, Bannon has been trying this in Europe with his so-called the movement. Some of these, far-right groups, anti-immigration groups in Europe, and it wasn't that successful. But what Bannon told us is he sees Brazil's presidential election next year as a precursor from U.S. midterms. So he and many of others such as like Jason Miller, they're really throwing their weight behind this. They think Bolsonaro going against his likely opponent, former President Lula. They see this really harken and reverberate in the U.S., just like Brexit, in their opinion, did in the 2016 update of Trump. So they're really, really, if you watch banners and talk shows and podcasts, they're going on about this constantly. And from what we hear, is they're in touch with not just Eduardo Bolsonaro's son, but other advisors as well.
What I find fascinating, the more I feel like there's a lot of stories that have been in Business Week that just kind of remind us that Bannon's still out there behind the scenes, to be quite honest, Andrew, that he's still doing his thing.
Yeah, definitely. And it's really interesting, too, is that, they've completely given Biden, in one way, the cold shoulder with all this. Well, even though that Biden is in the White House, they continue to follow Trump, and this has caused some a lot of tension on the diplomatic front. President Bolsonaro was one of the last world leaders to recognize Biden's victory over Trump, and since then what we've seen is that a very cool relationship between the two countries. And this, Brazil's one of the world's the largest country in South America, and I believe it's world's sixth most populous country. So for to have this fixation on Trump, it could cost Brazil down the line.
Well, so give us the context for everything that's happening domestically right now ahead of the election and how this plays into the challenge that Bolsonaro is facing.
Well, right now, President Bolsonaro's poll numbers are at a record low. Inflation is rising. Hunger is spreading, as the economy is reopening, but it's a very uneven rebound here. Brazilians, by and large, are very, very frustrated and upset by Bolsonaro really, doubting the coronavirus. He had it himself. He's called it a little flu last year. And right now, for those who haven't been watching the headlines, he and his cabinet were just in the U.S. and his health minister just came down with COVID, and as did his son on the trip for the UNGA. So Brazilians are really frustrated with his antics in a lot of ways. And what Bolsonaro has done is gone full Trump. He continues to cast doubt on COVID. He continues to call his critics, of spreaders of fake news and saying that they're trying to hijack voting machines and steal the election next year. What people fear is that he's really channeling Trump and, for a January 6th assault on the Capitol situation, and he's really laying the groundwork to, contest the election or disregard the results next year if he loses.
Speaking of that election, Lula, basically one of the most popular politicians in Brazilian history. And so what are the meeting of those two politicians? What can we expect? What's that going to look like? Well,
right now, very early polls are showing Lula cruising to a big victory right now. In Brazil, there's usually it's a two-round process. So if there's not a absolute majority on the first, it would go to a second round. But right now, some polls suggest that Lula up by as much as 20 points. And it's interesting, this parallel to the U.S., because Lula, not only being so popular, but he's really taken a step back and say, like Biden did in the U.S., and saying, I'm taking the pandemic seriously. And this has been the thorn in Bolsonaro's side for much of these recent months, is that he can't shake the damage that COVID has done in his country. And many people see that as his fault. Brazil has just passed 600,000 coronavirus deaths. And so people are not willing to forget so soon.
Well, it's fascinating to make the comparison between the United States, Trump, and what's going on in Brazil. Andrew, thank you so much. Andrew Rosati, Latin American reporter on the phone in Rio, along with Jill Weber, editor of Bloomberg Business Week. Check out the new issue of Business Week. It is the Sooner Than You Think issue on newsstands, online at businessweek.com, and, of course, on the Bloomberg terminal. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading after a turbulent week. We've got 60 minutes to go, and stocks, at least the S&P, best level of the day right now, up by 7 points. We've got the Dow back on the plus side, up 42, up 1/10. NASDAQ down 13, drop there of 0.1%. Stocks are struggling for direction after China intensified its sweeping regulatory crackdown on cryptocurrencies. Bitcoin, Ether, and other digital tokens tumbled. In another blow to investor sentiment, China said crypto-related transactions will now be considered illicit financial activity. Bitcoin down now by 5.6%. Bitcoin 42,198. In the United States, the call to regulate digital currencies is growing, and you can add former Treasury Secretary Larry Summers to that list.
Ultimately, for blockchain-based payments, that industry is going to do better, regulated in a sound way, rather than trying to be some kind of libertarian paradise.
And for more on crypto regulation from Larry Summers, tune in today to today's edition of Wall Street Week, 6 o'clock, right here on Bloomberg Radio and Television. New home sales reached a 4-month high in August. A sign demand could be stabilizing, but obstacles do remain. Record prices are shutting out potential buyers, and builders continue to endure supply shortages and worker shortages. To your home on the sea, let's talk cruise lines. Carnival Corp shares moving higher after the company said third quarter voyages were cash flow positive, offering investors some hope for a recovery in spite of a COVID-19 resurgence that has reduced bookings. Carnival Corp up 2.8%, rival Royal Caribbean up 2.4%, Norwegian Cruise Line Holdings up now by 2.4%. Recapping stocks mixed, S&P up 1/10. I'm Charlie Pellet. That's a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, what a week when it comes to China.
It's not over.
Again, Andy Cohen drinking game. Every time we said China, we'd all be on the floor. Oh my God, we'd be on the floor. Definitely controlling the news flow in a big way when it comes to markets, many industry. The latest we know, Tim, on our radar, once again, it's all about crypto. We talked about this with Katie.
And let's talk about it with a really great voice who joins us once
voice.
again, talking all things China, a guy with so much experience in the country. Dexter Tiff Roberts, he's Mansfield Fellow at the University of Montana, also Senior Fellow at the Atlantic Council's Asia Security Initiative, and our former colleague at Bloomberg Business Week. He was China Bureau Chief for years and the author of The Myth of Chinese Capitalism, The Worker, the Factory, and the Future of the World. It came out in March of 2020. He joins us once again on the phone from Montana. Dexter, how do we make sense of this week?
Well, as you say, it's been quite a week, and we've seen it in the markets around the world. I think the bigger picture is China and its leader, Xi Jinping, is continuing with this effort to put politics back into the economy. There's a massive regulatory push throughout the tech sector. The cryptocurrency, the latest ban on cryptocurrency, it seems like there have been numerous announcements over the last couple of years from China where they've banned it and banned it again, is also saying, this industry, crypto, which flaunts its freedom from regulation, has no place in China. And then, of course, we have Evergrande, and that's everything about trying to deleverage the economy. But I think at the same time also send a message to the Chinese people that the excessive wealth, in some cases achieved through questionable means, which I think is rife throughout the real estate sector, is no longer tolerated.
So I wonder if you were on the ground in China right now, over in Asia, and you were, putting your team and you're saying, okay, here's the stories I want to tell, or we need to be telling when it comes to China, when it comes to Evergrande. What are the questions that we need to be asking to be really smart, especially as investors? Former U.S. Secretary of the Treasury Larry Summers telling our David Weston earlier, that people should be on guard here. I don't think any of us have full transparency of what is going on in China, and that's the worry. So what are the questions? What are the things that we need to be probing to really understand stuff?
Well, I think in terms of looking at future targets from the Chinese government in different industries and businesses, anything that really touches on the livelihood of the Chinese people, they went after private education, they've gone after the big tech platforms, and now real estate as well. All these things really matter to the Chinese people. So we've heard about again and again about this new Common Prosperity campaign. This is about trying to reduce wealth inequality and at the same time have a private sector that is much more under the thumb of the government and the Communist Party. So I think an investor needs to look at what might come next, what matters to the Chinese people.
Well, what does in your view? Because they've covered a lot.
Yeah, well, I think obviously private health care, we've already seen signs of that. That's another big one. I think in terms of, we'll see more on the other part of the coin is anywhere where you see real extremes of wealth, you see business people making a lot of money, perhaps in industries that are destabilizing to the economy, like real estate, which has built up so much leverage. Those are all going to be targets going forward.
I've asked you this before, Tiff, but I want to ask you again, given that it's been a couple of months. What's the end game for Xi Jinping?
I think that Xi Jinping has made it abundantly clear over the last 6 months that he's actually willing to, first of all, he wants politics in control. He wants a politics in command economy. He sees the private sector as continuing to be important in creating jobs and vibrancy and innovation, but he wants it all under the thumb of the party and the government. So I think the belief is that amongst the top leadership is that they can actually continue to carry out these crackdowns, pull some of the excesses out of the economy, like the excessive leverage, get rid of some of the real extremes of wealth, and they can continue to grow. I'm not at all sure that they can pull that off.
So he wants capitalism, but not too much capitalism. And you think it's fair to say that he thinks that some of these businesses and these people involved with these businesses became just simply too powerful?
I think that's exactly what he thinks. And he's planning to, again, have a private sector that is much more answerable to the party. He wants to see, lesser extremes of wealth, and he's going to try to pull that off. That means we're going to see more crackdowns going forward.
Hey, Tiff, though, how do you reconcile what President Xi is doing right now and wanting more industries under the thumb of the Chinese government with also his ambitious agenda of being leaders on, in the high-tech world, really building out industries, no longer being, the manufacturer to the world, which they are increasingly not. But how can they do that? Can they do both?
Well, I think there's actually a real level of hubris we're seeing, and the sense that they can do both. They can become more self-reliant. They can close off their economy to some degree to the rest of the world. They've basically blocked all travel in and out of China, and probably will continue until at least late next year when they have a party congress. And they've made it more difficult for, companies and institutions around the world to work with China. I think they have this idea that they can go it alone. They've reached a level of power and an economy of a certain size. I'm afraid that, again, hubris here. I don't think that it really is doable.
Just in the last 30 seconds that we have, what are you watching for next? What's the next shoe to drop?
Again, I just mentioned the healthcare industry, the private healthcare industry. China refers to 3 big mountains that contribute to inequality in the wealth gap: housing, education, and healthcare. They've hit housing, they've hit education. I think healthcare is up next.
It's really fascinating because in many ways, that's the same 3 here in the United States. And the U.S. is also looking to tackle it, but obviously by different modes.
Not to mention, quote unquote, rein in technology.
Exactly. Yeah. So it's interesting to see the different ways of doing so. Tiff, you are the best. Tiff Roberts, he is Mansfield Fellow at the University of Montana, author, former Bloomberg Businessweek China Bureau Chief. His book, The Myths of Chinese Capitalism, really
plays into so much of what we're seeing right now.
Let's head down to Washington, D.C. to get a check of latest world and national news. Nancy Lyons joins us now. Hey there, Nance.
Hey, Tim. Homeland Security Secretary Alejandro Mayorkas says no individuals remain at the migrant camp in Del Rio, Texas, as of today. He says there have been 17 expulsion flights returning migrants to Haiti, and he says about 12,400 people will have their cases heard here in the U.S. He also addressed those videos showing Haitians being pushed back by customs agents on horseback.
The images horrified us in terms of what they suggest and what they conjure up in terms of not only our nation's history, but unfortunately the fact that that page of history has not been turned entirely.
Mayorkas says they're dealing with a broken immigration system that needs legislative reform. President Biden earlier today said that the agents on horseback will face consequences for their actions. The House Budget Committee will be holding a rare Saturday session to move forward on the president's economic agenda. We got an update from Bloomberg's Amy Morris in Washington.
House Speaker Nancy Pelosi says the plan is to vote on the $3.5 trillion package next week. Now, the chair of the House Rules Committee, which governs floor debate, says they could consider it as early as Tuesday, which would tee up a vote for midweek. The legislation has been held up by disagreements within the Democratic Party over the size and scope of the package. In Washington, I'm Amy Morris, Bloomberg Radio.
The jury in the R. Kelly trial is now deliberating the case. The group is made up of 7 men and 5 women, deliberating 9 counts against the R&B singer. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week. Carol Master along with Tim Stenovic. If you take a look at the most read stories in the past 8 hours on the Bloomberg, number 8 is about the ultra-rich boom that's fueling an M&A frenzy for wealth advisors. I got to just say something. I was thinking about, because we often have wealth advisors on, and I was thinking how many there are out there, and that, again, speaking to wealth in China, wealth in the United States, indicative of the wealth accumulation among some members of our population, increasingly so, and then they're trying to figure out what to do with it.
Yeah, check out this story by Scott Carpenter. As Carol said, it's in the top 10 most read stories of the day today here in the U.S. Almost from the day he started his wealth management firm in 2014, Russ Charvonia would get unsolicited emails offering to buy the company. He'd send them directly to his trash folder.
Right, but like hundreds of other managers this year, he eventually took the plunge last month. His Ventura, California-based Channel Islands Group and its $277 million in client assets under advisement officially became part of Mariner Wealth Advisors for an undisclosed sum. Sale was only one of what could be a record number of acquisitions in the wealth management industry, where growing legions of rich individuals who need money advice are attracting more interest than ever.
Private equity cash has been pouring in bigger financial services firms. They see an opportunity to expand by adding advisors who already have long-standing relationships with rich clients and the ability to reel in new ones. I wonder, though, Carol, because it comes at a time when many of the next generation of investors, look, there's a big narrative about Robinhood and day trading and retail stocks right now, but at the same time, there's also this movement into robo-advising and, doing this automatically through robo-advisors for low fees.
Yes, but when you get to a certain, like when you get really wealthy, like you want somebody in there because some of what you're going to do, it's not just putting it into the market, but you're going to make an investment maybe in a startup or a company. I've seen a lot of that.
The Wealthfront CEO tells us that's generational.
Yeah.
He would. Yeah, he said that's generational.
How do you put large blocks of money, though, maybe? And
without his person on the other end of the phone.
I don't know. And the returns can be pretty dramatic if you're investing in a specific company. Check that story out. This is Bloomberg.
analysis, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 43 minutes to go until the closing bell. Choppy session, but right now we have got the S&P 500 index close to session highs. Lots going on. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
Charlie, U.S. stocks are quiet today amid the plunge in Bitcoin. Dow's currently up 42 points. S&Ps are higher by 6. NASDAQ declines by 20. The U.S. 10-year yield at 1.46%. Gold is up 4. Transports jump 137 points. And Bitcoin is down 5.4% as China crackdowns on crypto. Among the main 11 S&P sectors, leaders were energy and telecom. Real estate led to the downside. And leaders to the upside in the Dow, Salesforce and Visa, while Nike fell 6.4% after earnings and led to the downside. In other news, Carnival reported a Q3 adjusted net loss of $2 billion. And wrapping things up, Costco rose as much as 3.3% after earnings and traded to $467 a share. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg type Squawk SQUAWK on your terminal, I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Time now for our weekly crypto update. It is brought to you by Interactive Brokers. Trade crypto for less coin with commissions, just 12 to 18 basis points. No hidden spreads or markups. Learn more at ibkr.com/crypto. So let's get to our weekly crypto segment.
Well, we have been talking a lot today, specifically with regard to China, because Bitcoin.
Oh, anything going on with China?
Yeah, well, Bitcoin taking a hit. It's funny. We were talking about this with Katie Greifeld. A 9% decline.
I was being facetious, you know that.
I know you're being. I know, but you make a good point because when it comes to volatility in Bitcoin, a 9% drop, right? A 4% drop, that's nothing to write home about.
Exactly. All right, so let's see what our next guest has to say. Jody Gunsberg is managing director at CoinDesk Indexes on the phone in New York City. Hey, Jody, good to have you here on Bloomberg Business Week with Tim and me. So the volatility, I think Tim and Katie, they make good points. Cryptocurrencies, Bitcoin, they do trade up and down, or it does trade up and down. And the moves today, we've seen much more dramatic ones.
That's right. We have seen more dramatic ones, though the move today is still pretty big. And what it's resulting in is a week that's down over 13%, which is the worst since May. And it's in the top 6% of worst performing weeks in all the data we have since 2014. So it is pretty significant.
Is it all because of China?
No, it's not all because of China. We've had a lot of news this week come in regarding not just China's crypto ban, but the crypto provision passed by the House, and then the Fed's meeting indicating that tapering will come soon. So a lot of things were driving the volatility, and I think that that's the most interesting thing to me is the volatility, because the volatility increased to over 70%, which in itself, it's not that high, but the speed at which the volatility picked up, it gained 17 percentage points. And that's an acceleration in the top 7% of all volatility spikes. So again, that's pretty fast.
So wait, say that again, because Tim and I were we turned off our mics like, wait, what did she say? Did you say Bitcoin, this was, in terms of down weeks, among the top 6?
6%.
Oh, okay. Wait, so say it again.
So for Bitcoin, right, it was down over 13%, which was the worst week since May, and it's in the top 6% of worst performing week.
Okay, that's what we wanted
data since 2014.
Okay.
So that's still something. Hey, I want to go back to what you said about the Fed and tapering. So connect for us the moves in cryptocurrency with what we learned from Jay Powell in the Federal Reserve this week.
Yeah, so the Fed had indicated some tapering, which means that they will start to pull back on the stimulus. And what I think that indicates is that they expect growth and inflation to be pretty strong over the next year. So with that, Bitcoin actually does really well with inflation since it is priced in dollars. So right as the dollar drops, that should help the Bitcoin price. And we see that in the data. Historically, the Bitcoin has an inflation beta of 63. meaning on average for every 1% increase in inflation, it results in a 63% increase in the Bitcoin return. And just so you understand the magnitude of that, it's about 10 times more than you get with stocks and about 5 times more than you get with commodities, which are also known as strong inflation hedges from oil, which is the most volatile component of CPI, and because commodities are also priced in dollars. So they have that same relationship. So for investors, they can get a similar inflation protection with just 1% allocated to Bitcoin as compared with 5% allocated to commodities.
But investors there's still not that oversight. We were talking a little bit about that. I mean, so investors may be starting to really look at it as a traditional inflation hedge. That still has a ways to go because of the volatility that can be baked into the crypto trade, Bitcoin specifically.
That's right, and it's not just the volatility, but it's because of why the volatility, and that's coming from a need for regulatory clarity. So
do we get that anytime soon? We've been really grappling with this, Jody, a lot. You know, trying to see if China's kind of taking themselves out of the equation, and does that set the stage for perhaps U.S. regulators to really set the rules, maybe Europe weighs in. And at the same time, I still have a hard time when I feel like cryptocurrencies, the whole idea is to not be part of the mainstream environment. The idea of regulatory oversight, I have a hard time getting my head around it.
Well, the regulatory oversight, we hope, does come soon, and it's a process, so it can take some time. But the more we know about the rules that we need in order to play this game. And if we have more understanding of what the regulations will be, then we can put better infrastructure in place in order to comply with all of the regulations that are being set forth, and that should reduce the volatility and increase the confidence and accelerate the institutional adoption, which can then grow the market.
Okay, we only have about 30 seconds left. When does that happen?
I don't know the answer to when, but the U.S. House just passed the crypto provision. We're waiting to see if the Senate passes their version, and then all of Congress can pass a consolidated version, hopefully.
So are you thinking 2021, 2022, 2025?
I wish I had the crystal ball, but I just don't know.
Yeah, good point. All right. Jody Gunsberg, Managing Director at CoinDesk Indexes. She joins us on the phone from New York City. Thanks so much for taking the time, Jody. Really appreciate it.
Stay tuned. Stay tuned. Bitcoin, though, we're seeing definitely a bunch of selling pressure. If I bring up the crypto monitor, everything's down. Crypto, though, Bitcoin specifically down 5.4%. You are listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. We are in such a Friday mood. I hope all of you are doing well out there because...
You know, this was even a short week for me.
That's right, you weren't here on
Yeah,
Monday.
I wasn't here, but, we're back in action.
We're back in action.
This is like our first full week-ish together.
You in
in a
General
long time.
Assembly this week? Yes,
Yes.
you and I know, maybe you and I are just like a little wacky being together.
I think that's what it is.
Stocks are to their highs of the day, so let's get another check and read on that trading day. Hey, Charlie Pellet.
And let's say it again, highs of the day right now on the S&P. That means a gain of 10 points right now, up by about 0.2%. NASDAQ narrowing that loss now to just 1 point. We'll call that unchanged. We've got the Dow up 62. That is a gain of just about 0.2%. So green on the screen right now, best level of the day for both the Dow and the S&P. 10-year yield, 1.45%. 10-year down 8/32. That 10-year worth repeating, 1.45%. Spot gold up 0.3%, 17.47. Cannot ignore Bitcoin today, down 5%, 42,453. And West Texas Intermediate crude, 73.99 a barrel, up by 0.9%. Bottom line, stocks have erased losses. Digital tokens do remain lower after China's sweeping regulatory crackdown on cryptocurrencies. We've got energy and financial companies leading gains in the S&P 500. Tech shares underperforming again. NASDAQ down now by 1 point, little changed. Interestingly, the NASDAQ 100 index up now by about 0.1%. The United States will start giving COVID-19 booster shots to millions of Americans today, a milestone in the nation's fight against the pandemic. The Centers for Disease Control and Prevention adopted the use of boosters for people at high risk of contracting or falling seriously ill. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
The debate really comes for the rest of the population. The data suggesting that boosters are going to be worth the extra protection that they might give is really not there. It makes sense to try to protect our healthcare workers, for instance, and so logically speaking, it's something that we should really consider, but the data isn't there in terms of how useful these boosters are going to be, and that's where the debate really is falling in.
Dr. Pekosh with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine names that we follow, we are looking at Pfizer, down 0.3%. Its German partner BioNTech, down 4.5%. AstraZeneca shares, they're up by 1.7%. Those are the ADRs. Moderna shares out of Cambridge, down 5.3%. J&J, Johnson & Johnson, down 0.2%. Again, recapping, equities trading mixed. We've got a half-point loss now for NASDAQ. S&P up by about 10. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This
She was in another, right? Yeah.
Right. I mean, she sang Goldfinger.
That's right.
I mean, that's what you think of. Of
That's
course,
what I'm
these
thinking.
days, she's Dame Shirley Bassey.
How cool is that?
Yeah,
Distinct
absolutely.
voice, right? Don't you think there's just certain performers out there and you just, their voice?
I mean, I've played the song History Repeating on the air a couple times. And,
Yeah.
it was a more contemporary piece by a band called the Propellerheads, but they brought her in to sing on it. And, yeah, it still sounds like Dame Shirley Bassey.
Hey, am I getting any respect from you that I've actually been able to guess a few things without Googling?
You're good.
Okay, I'm
You're
good.
good.
I can't tell if he's
Yeah.
buying. Yeah, nice.
No,
Tim.
he's cool. He's
All
cool.
right,
He's
cool.
yeah.
All right, so let's talk about the chart of the day.
Okay, it's all about big spenders. Companies spending a lot of money on their shares.
buybacks, right?
Exactly. We got the numbers yesterday from S&P Dow Jones indices for the second quarter. So there's a bit of a lag considering the third quarter ends next week. Nonetheless, I mean, the numbers are sort of instructive. If you looked at total spending for the S&P 500, you're at about $199 billion. You go back to the first quarter of last year, you were at about $199 billion. And so even though in the second quarter of last year, buyback outlays fell 55% over the past year, the entire decline has been made up. So we're back to pre-pandemic levels when it comes to share repurchases. That's one piece of it. The other piece of it, and what the chart focuses on, is the growing role of the big spenders. Think Apple, think Google's owner Alphabet, Facebook, Microsoft. You can also throw Oracle into that mix. So S&P Dow Jones provided figures on the top 20 companies when it comes to buybacks. And if you looked at the second quarter data, it showed that they accounted for 56% of the total spending on repurchases. Now, S&P Dow Jones also had a 5-year average for that figure, 38%. 10-year figure, 29%. Is this sounding familiar? You know, the biggest companies having a growing dominance over the market. Hey, we could have that same discussion about the S&P 500 itself, let alone the buybacks.
Well, and it's interesting because you think about buybacks and how much we talk about how much liquidity is out in the markets, the support, you know, you've got to put the money to work somewhere. But I do also wonder, buybacks, how much that props up the trade at this point, the equity trade in particular.
Well, it's part of the mix and has been for years, arguably. And, you know, the idea that we're already back to where we were just before the pandemic began. Right? Yeah, I mean, last year, remember, there were companies selling shares to raise cash because they needed it. Now you have companies buying back shares.
So in a sense, is nature healing? Is this a good thing?
Well, that's another question. I mean, it comes down to where does the money go? And we can actually get into that in a moment when we talk about my stock of the day.
Well,
but before we do,
Carol's raising her hand.
Raise hands for a second. Is it because companies are so profitable and they have a lot of money to put to work, or is it because they're going to the debt markets and raising money and then using that money to do buybacks?
Yes, in short, it's both. Okay. I mean, we know earnings have been better than analysts were anticipating. We also know that it's relatively cheap to borrow. Put the two together, you got buybacks again.
I'm done.
Okay.
Stock of the day?
All right, before we get to that, don't forget, if you want to see this chart and the explanation that goes with it and everything I do going forward, the email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net. And as for the stock of it, it's okay. Altice USA, you know them for Optimum Cable. Yesterday, the shares were down almost 13% after the CEO, Dexter Goy, came out and talked about how the company may lose as many as 20,000 internet customers this quarter. Well, today, you had a second day of decline, stock down as much as 10.5%, fell to an 18-month low, and at the moment, Altice USA, ticker ATUS, is down about 8%.
That was my pick yesterday on the close, Dave.
There you go.
Look at that.
Altice, it was. You got a little ribbing for that, didn't
you? I did. I got a hard time. But 46% lower this year, Dave.
All right,
Altice
find
USA.
it on Twitter at 4:15 p.m.
Wall Street time.
Thank you.
Thank you, Dave Wilson, Stocks Editor. Let's go to Washington, D.C. for an update on world and national news with Nancy Lyons is right there. Hey, Nance.
Hey, Tim. President Biden is holding his first face-to-face White House meeting with the group dubbed the Quad, including the prime ministers of Australia, Japan, and India. Bloomberg's Irv Chapman with more from Washington.
The president said the agenda would range from COVID to climate.
We're 4 major democracies with a long history of cooperation. We know how to get things done, and we are up to the challenge.
Australia's Scott Morrison hinted that China would figure prominently.
We believe in a free and open Indo-Pacific, a region that we wish to be always free from coercion, where the sovereign rights of all nations are respected and where disputes are settled peacefully.
Morrison also included cybersecurity and supply chain disruption among subjects to discuss. In Washington, Irv Chapman, Bloomberg Radio.
Homeland Security Secretary Alejandro Mayorkas says there are no more migrants in a large makeshift camp in Del Rio, Texas. He says many of them returned home on one of 17 flights to Haiti. About 12,400 will have their cases heard in the U.S. In providing the update, Mayorkas condemned the images of Border Patrol agents on horseback confronting the Haitians.
We know that those images painfully conjured up the worst elements of our nation's ongoing battle against systemic racism.
He says the incident is being investigated at the highest levels, and he vows that the results will be made public. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stanovic. You've been dying to do this story, I feel like.
I have. I just love, I love a lot about it. I mean,
second most read on the Bloomberg in the past 8 hours.
It has a great headline. Solomon Sisters is coming to Wall Street, backed by Lazard. Wall Street is about to get a new investment bank, one that very deliberately shatters the glass ceiling. This one written by our own Eric Schatzker, Sridhar Natarajan, and Liana Baker.
So the firm Independence Point Advisors will be both owned and managed by women and minorities, which is, you know from listening to Bloomberg, a rarity in an industry long dominated by white men. Lazard finalizing terms of a minority investment in Independence Point, as well as a partnership that will extend from M&A to advice on corporate governance. This is according to people in the know if they've got knowledge of these negotiations.
It's the brainchild of Ann Clark Wolf. You might recognize her name. She was chair of Bank of America's massive corporate and investment bank division. Early on, the joke was that a women-run firm should be called Solomon Sisters, a wry twist on the testosterone-fueled Solomon brothers of old, and it remains the code name for Independence Point in New York's tight-knit crowd of bankers and financial headhunters.
It's fascinating. Wolf is a Solomon alum herself, mainstay on American Banker's Most Powerful Women to Watch list, previously held leadership posts JP Morgan Chase and Citigroup, working for Jamie Dimon and Michael Corbat. This story says her firm could be a magnet. We know that there is across Wall Street, many women, members of minority groups, frustrated after decades in which investment banks diversified their senior ranks at a glacial pace, leaving men atop all but one of the bulge bracket and boutique firms. I mean, I was just talking about this with some very senior women at a firm yesterday, and just how still in so many different industries, and certainly we still continue to see this on traditional Wall Street, it's very hard to see, you just don't see the diversity, whether it's more women or more minorities when it comes to those senior positions.
We should note that Wolf declined to comment, as did a spokeswoman for Lazard. Still, I think an open invitation to Ann Clark Wolf to join us on Bloomberg Business Week Radio. We'd love to have you on the show.
Come join us anytime. All right, we're going to count you down to the closing bell on this Friday, wrapping up the trading week in just a moment. Carol Master, Tim Stanovic, this is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Late Day Rally. This update brought to you by SEI. Crises bring out the best in people, character, community, partnership, together as one. SEI, go to SEIC.com/IMS. Right now, we are at the best level of the day right now. Monday, a distant memory. We've got the S&P on track for a winning week, up by about 0.7% on the week. 12 minutes to go. We'll see how things shake out. But right now, the S&P up 13, a gain of 0.3%. Bottom line, best level of the day. The Dow up 77 now, up by about 0.2%. NASDAQ higher by 10, a gain there of 0.1%. Bitcoin, a major story, plunging 5.3%. Stocks erasing losses, turning around. Digital tokens, though, do remain lower after China's sweeping regulatory crackdown on cryptocurrencies. Energy and financial companies leading gains in the S&P. Right now, West Texas Intermediate crude up 1%, 74.02 a barrel. 10-year big story, yield on the 10-year right now, 1.45%. Gold up 0.3%, 17.47 the ounce on the precious metal. So again, recapping, we've got that 10-year at 1.45%. The Dow, the S&P, NASDAQ all advancing. Best level of the day. Late day rally. S&P up now by 13, up 0.3. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. It's 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
The U.S. is faced with a surge of migrants seeking asylum at its southern border. Two things to keep in mind. First, without immigrants, the U.S. cannot grow and prosper as it should. Second, those immigrants should enter the country lawfully. A system that tolerates lawlessness at the border cannot command the confidence of law-abiding citizens. Ideally, asylum claims should be processed away from the border, but doing this effectively will be expensive. It demands refugee processing centers in Mexico and Central America so that applicants can be vetted before they try to cross into the U.S. It's key to remember that many of the people seeking admission at the border are would-be economic migrants, not genuine asylum seekers. It would serve U.S. interests to welcome more such migrants through new channels. This would deflect many economic migrants from regarding the asylum process as the surest way of getting into the U.S. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, we've just got about 10 minutes left in today's trading session. We are near our highs of the session on this Friday. And what was been quite a week, Tim, you and I were having some fun about, it's like Monday never happened.
It's pretty wild to see that. I mean, if we take a look at where stocks are for the week, we're looking like we're going to end the S&P 500 higher by 0.6%.
A little bit of a gain there.
All
right, let's get to it. Time for the drive to the close. Chad Garcia is with us, VP, lead portfolio manager at Ave Maria Funds, co-portfolio manager of the Ave Maria Growth Fund. That fund, by the way, up 17% year to date, putting it in the 45th percentile compared with other funds in the category. That's according to our data, up 33% over the past 1 year. He joins us on the phone from Florida. Chad, how are you?
I'm doing great. Thanks for having me on.
Hey, this market environment, how would you describe it?
Well, this week's been pretty volatile, but mostly flat.
Right? Isn't that crazy?
Yeah, it is. Although it is nice to be up at the end of the week, given where we started.
Yeah, it's always nice to be up on a Friday, right?
Yeah.
Does that tell you, though, that, Chad, that, buying the dip was the right move here?
I was buying the dip in my portfolios, so
it was enough of a dip for you to buy.
Because
I think that was
that I did.
Well, I think that's the question that a lot of people had is this a precursor to something bigger that's going to come?
Well, I mean, what we were buying was a little bit more effective than the general economy. That was enough to make me buy. With respect to, is this a precursor of something more to come? I mean, I think that the earnings ended strongly. It looks like the coronavirus is dissipating. The hospitalizations for the U.S. is about 80,000, which is down from the recent peak of 100,000. So
Right.
I think that's seeing the economy ending the year strong, to the point where they're gonna announce a taper in November and probably start that in December.
Hey, let's go back to, I love talking about people or with people who are managing funds. You mentioned you were buying on some of the declines that we saw. Obviously, there were probably some more interesting entry points. What in particular were you buying?
We don't disclose our buys until after they've been publicly disclosed.
Okay.
But I can tell you some interesting stocks that we're definitely looking at.
Yeah.
Well, the biggest. So you mentioned that the portfolio manager of the growth fund, I'm also portfolio manager of the focus fund, which is in the top quartile year to date. And our largest position is eDreams, which is an online travel agency in Europe. And this is interesting for a couple of reasons. Number one is that they only focus on leisure travel, and leisure travel is going to rebound much quicker than the overall travel market because business is going to take a little bit to recover. And we've already seen that. They've announced their August bookings, and their August bookings were up 28% over the 2019 pre-COVID numbers. And so the consumers, whether it's in the U.S. or Europe, they want to travel, and so that's exciting. And then the other exciting part of this business is that they're switching from a transaction model to a subscriber model, where the subscribers get discounts on trips that they book using them, and they pay a fee up front for that privilege. And currently, their subscribers are up to 1.5 million subscribers, which is exciting for them.
It's been on quite a run. It's up about 95% so far this year. But you think there's more opportunity, more move to the upside?
I think that at 1.5 million subscribers, this is where they're at. The subscribers are paying around 60 euros a year. Just the cash flow stream from those subscribers alone, I think, values us at 10 to 20 euros a share, and you get the rest of the business for free.
And the ADRs in the U.S. trade under the ticker EDDRF, just in case anybody was wondering.
Yes, the ADRs in the U.S. aren't that liquid, so it would be one that you'd probably want to buy in the primary market.
Okay, good to know.
Chad, another stock our producer is telling us that you have as a pick, Heiko, has about $16 billion in market cap. Airplane parts. Take us into it.
Yes, Heiko is also related to travel like eDreams. This one's going to be a little slower to recover given that they're exposed to the travel industry overall. But Heiko has two businesses. The largest is an aftermarket parts business for commercial planes. And what they do is they put themselves in a duopoly position with the original equipment manufacturers. They charge about 30% less than the original equipment manufacturers, and they capture about a third of the market. And the secret sauce is the ability to sell parts for airplanes is governed by the FAA. It has to approve each part that goes on an airplane. And Heiko's advantage is that they can get about 500 new parts through the FAA approval process per year, which is multiples higher than anybody else. And so what they do is they allow the airlines an alternative parts supplier to the original equipment manufacturers, and they save the airline money. So while Heiko is going to be a little slower to recover than eDreams because it's exposed to the overall travel market, it should do decently well because, in this challenging environment, the airlines are going to be looking to save money any way they can.
Hey, just quickly, just got about 30 seconds left. API Group is another one, an industrial maintenance company. It's up about 15% this year, $4.7 billion market cap, excuse me. Just quickly, your take on that and why you think it's a buy.
Well, it trades about an 7 to 8% free cash flow yield. And for a company that has an organic growth rate, this company has grown organically about 7% per year for the decade prior to COVID. And then on top of that organic growth, they are able to roll up mom and pop small businesses paying between 4 to 6 times EBITDA, which further accelerates that growth. They just bought Chubb Fire and Safety, which is a large business that was an orphan company out of Carrier, a public company. That gets them into multiple markets around the world.
Right.
Blackstone Group was also bid for that business, but decided to back API's bid by investing in API through convertible preferred.
Got it.
I think Blackstone's going to open up their portfolio of real estate holdings in a lot.
Well, good to know. And unfortunately, we've got to run. Chad Garcia over at Ave Maria Funds joining us on the phone. All right, folks, get ready. We're coming up with our Bloomberg TV team for Beyond the Bell on radio, TV, and YouTube.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Taylor Riggs, Sonali Bassick in for Caroline Hyde, counting you down to that closing bell. Here to help take us beyond the bell. Global simulcast. Our team, our partners, Carol Master, Tim Stenovic, bringing together all of our audiences across television and radio and YouTube. Carol, I think you made a comment. I didn't quite hear the comment, but I assume it has something to do with the market reaction that we saw today.
I was just saying that, no, we're definitely your partners.
Oh, okay.
Yeah, what a week, right? If you think about how we started, and I was just kind of looking at the weekly performance, the Dow is on track for a weekly gain after 3 down weeks, S&P on track for a gain after 2 down weeks, the NASDAQ, though, on track, NASDAQ 100 on track for a 3rd down week. So if you add it all up, that's kind of where we're going. And I like to look at those, trend lines, Tim, when it comes to kind of longer term performance.
Well, let's look at the short-term performance of the day, because this S&P 500 was struggling for direction much of the day. It did take a little bit of a tick higher. It's lost some of that momentum. Still looking like it's going to finish up close to 0.2%, Taylor. But look, it looks like it's good enough to bring us into the green for the week.
Yeah,
higher by about 0.5 percentage point. Think about where we were Monday. Quite a far cry.
Yeah, I think, Tim, you really nailed it. That I'm not sure on Monday that we thought that this would be the case. Tim, I just take us cross-asset. Sonali, you know that I always do. It is unbelievable when we talk about a rate of change on the 10 and the 30-year yield at a 145. A lot of strategists were saying once you get above a 143, heads up, 160 is next.
Yeah, maybe not enough for many assets, but enough certainly for the financials. You do see the tech, as we were talking about, a little bit lower.
Yeah, I mean, that was a pretty big move here that we saw this week. It was at like 9-10 basis points on the 10-year, and then you had that 30-year move. You talk about where we started the week here, Carol, of course, on the S&P 500. It looked like this was going to be an awful week. Of course, we opened on Monday at right around 44.02. We're going to end the week right around 44.56 here. That's up about 7 points on the day. That's up about 0.1% here on the day. And, of course, on the week, that's going to add up to roughly about 0.3 to 0.4% here on the S&P 500, if my math is correct. My math is wrong. My math is actually should say 0.5%. Look at that, correcting on the fly. Value add right here, Carol, on the show. Dow Jones Industrial Average up 33 points. That's fractionally on the day. It's actually going to end higher on the week by 0.6%. My math is correct on that. And look at this. The NASDAQ actually is going to end the day down by about 4.5 points, but it's actually going to end the week higher.
Oh, it is going to end higher.
By 0.02%, so less than 0.1% there on the green for the NASDAQ composite. The Russell 2000 lower on the day but higher on the week, 22.48. That's your read right now.
Yeah, exactly. NASDAQ 100, though, still, it looks like flat on the day. I mean, what a crazy trade and what a crazy week. What's interesting is if you got a feel of kind of the market trying to figure out direction today, look at the S&P 500, the split. It's almost even, although a little bit more of a risk-on trade. 278 names in the S&P 500 higher today, 227 lower. So, Taylor, that gives you some feel of kind of the back and forth that was maybe going on in the trade today.
I love that you went there, Carol, because that's exactly what I was going to say. For the radio audience, we're going to do something today that we haven't done in a while. And that's when I point to the gainers. There's actually some green on the screen. When I point to the decliners, there's actually some red. Earlier this week, there's been a lot of red in the gainers, and there was a lot of gainers in the losers. So like Carol was saying, really talking about some of that perhaps maybe even kill trade that we see today. So let's just hit it quickly. How much of this is that reflationary trade with yields higher for 2 straight days? Rate of change day, it's autos, it's banks, it's energy. You're up 0.8 and more than 2.2% higher on the day. We bring you down to some of the losers, Carol, and a lot of this, again, you could highlight just some of that unwind of a bond trade here with household and staples, consumer durables, real estate. Those are the big laggards on the day. You're off 1.2 to more than 3%.
All right, let's get to some of those gainers. Carnival, we talked about it yesterday. It's actually up 3 days. I think I'm counting correctly. Maybe a little bit more in a row. Up about 3% in today's session. Company coming out, top gainer in the S&P 500. Shares climbing after the company said third quarter voyages were cash flow positive. So it's giving investors some hope that they are moving closer and closer to a recovery, even though we're seeing a COVID-19 resurgence that has reduced some of their bookings, but maybe getting closer to being normal. Costco, gotta mention it. This was a company that reported earnings after the closing bell, and just taking a look at the trade, you can see that stock up 3.3%, top of the NASDAQ 100, reimposing those some limits on what you can buy at stores. We're talking about toilet. Here we go again.
Here we go.
Toilet paper, paper towels, cleaning supplies.
Yeah,
So you're saying I should go out and start
hoarded mine
hoarding?
in March 2020,
Don't
and I
worry.
still have like PTSD from it.
Don't
He
worry, Carol.
stole all of my
Hoarding.
toilet paper.
Carol has
Did
a
he
cellar
really?
full. She's got a cellar full.
Yeah, the Depression-era parents, they kind of stay with me. Anyway, Costco says it's absorbing some of the expenses, asking suppliers to do the same. It will still have to pass along some of the pain to consumers through higher prices, but we did see, Costco, sorry.
Costco and
Thank you so much.
I was just reading them off.
Fiscal fourth quarter adjusted earnings, $3.76 a share. That was a beat. Revenue, too, was a beat. Match. Help me out here, up 4% in today's session, top in the S&P 500, NASDAQ 100, not sure. IAC, which used to be owned by Match, it talks to buy magazine publisher Meredith Publishing. Tim reminding me, Barry Diller still owns about 5% of Match.
Yeah.
I don't know.
Yeah, I thought that was a weird move, too.
Right?
It did seem to be tied to the Meredith deal, but I didn't quite understand the connection.
All right, I'm going to pass the baton on to
We should talk to him.
Oh, the baton. Caroline calls it the baton.
You know he watches, right?
Who, Barry Diller?
He loves Beyond the Bell.
Oh.
Go to the island.
Who doesn't love it?
That may not be true.
His wife does too, Dion von Furstenberg. I'm just telling you.
Well, you got the gainers, Carol. I got the decliners. We've been talking about Nike all day. It's certainly the one that I picked as among the most notable decliners of the day. The worst performer in the Dow and the S&P 500 finishing the day down by more than 6.2%. The story's been happening since yesterday, lowering its sales forecast due to production and shipping delays, factory closures in Vietnam, preventing it from keeping up with consumer demand. About 40%, Poonam Goyal from Bloomberg Intelligence pointed out to us yesterday, of Nike sneakers come from Vietnam. And it's not like they can move that production to another place very quickly. So this is something that could continue. Shipping times from Asia to North America also worsening in the quarter, essentially doubling. That also hitting shares
Tim,
of...
I thought the interesting thing came out of that call, too. I mean, they talked obviously a lot about Vietnam and the shipping costs, but they also pointed out a lot of the congestion issues right here in the U.S. ports and the labor shortages here and being able to unload stuff.
Well, look what's happening at the Port of Los Angeles and Port of Long Beach. I mean, you have, more than 50 ships out there just waiting for what's going to happen. And you guys have spoken to the heads of some of those ports recently and just heard about the congestion. We heard it from executives, do your Christmas shopping now, because this supply isn't going to be there, but demand certainly is going
I should do my Christmas shopping now, and I should start hoarding toilet paper, according to Carol.
I don't want toilet paper for
Happy
Christmas,
Friday.
Romaine. I'm
Spend
just
the
going to tell
weekend
you
doing that.
already.
Look, the Nike concerns, though, hitting other companies in the space. Adidas, or as I was corrected earlier in the day, Adidas, shares ADRs of Adidas.
Shame on you,
finishing lower
Tim.
by
We don't
3%.
mispronounce things on this show.
I know.
Yeah.
Down more than 3%. And then crypto taking a hit today. Bitcoin taking a hit as well. We've been talking about it all day. Yeah, Coinbase.
What is that, like half a standard deviation, Taylor?
Well, we talked about...
quarter.
We actually we talked a little bit about that on the show, and we were corrected and said that it was actually a relatively bad week for Bitcoin, even though we do tend to see these types of moves. And look, it hits crypto-related stocks like Coinbase as it did today.
One standard deviation barely even catches Romaine's
How many standard
attention
deviations in the bond market?
these days. You're getting some decent moves if we want to do standard deviation and yields, Tim, and that's where we'll go next. You're up 2 basis points on the day, 5 basis points on the week. What that means is we've totally erased yield lower that happened Monday, Tuesday, because here for the week, you are 9 basis points higher pretty much all across the curve. Carol, I'll just quickly say it was a 143, the next leg up. It's a 155, a 160 on the 10-year, a 199 on the 30-year. So we are quickly approaching some of the year-end price targets that analysts have for some of these yields.
Yeah, when it comes to markets, bond market, certainly one of the bigger standout stories this week. Also, in terms of standout stories, how many times have we talked about China and Evergrande this week? That was really our big story. go back to Monday. Tim, you talked about this earlier. Like we all got this feeling that, wait a minute, is this the beginning of some unwinding when it comes to global markets? Is that big Chinese real estate company going to have more of an impact? And it's interesting, former U.S. Treasury Secretary Larry Summers talked about Evergrande's woes, says they're not a Lehman moment, but that investors should be on guard. He caught up with David Weston on Bloomberg Television's Wall Street Week. Check it out.
I don't think this is anything like a Lehman moment. We're not going to have any kind of cascading financial collapse in China. But I also don't think everything's okay. People should be very much on guard here. And I don't think that any of us have full transparency into what's going on in China.
And check out that full interview with former U.S. Treasury Secretary Larry Summers at 6 p.m. Wall Street time on Bloomberg Radio and TV. He also said real estate problems are often never isolated to like a single company, so we still don't know a lot.
Well, that's a good point. I mean, in the 2 o'clock hour on Bloomberg Television, we had Rory Green over at TS Lombard, the chief China economist, and he talked about this issue here, that everyone's so focused on Evergrande that they sort of forget that there are a lot of other real estate companies in China, property companies, that essentially have a very similar business model, a very similar borrowing lending pattern, and that a lot of folks should start turning to those companies and make sure that everything's copacetic there.
And reports coming out that China is saying that they're going to be stepping up oversight, making sure the housing projects are completed and that money is not diverted to creditors. That could be a hint of why we're at 29 cents on the dollar.
Right, and Summers also saying maybe we don't have full transparency on this, which would be not uncommon when it comes to China. Guys, we got to run. Busy week. Good to see you all. Good to talk with you all. Beyond the Bell, our cross-platform coverage on radio, TV, and YouTube will be back on Monday, same time, same place, everyone.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You are listening to Bloomberg Business Week. Carol Masser along with Tim Stenovic. And we do need to get a check on world and national news. We'll get to that in just a moment. But it is kind of a crazy week.
It is kind of a crazy week. I mean, just to wrap things up a little bit and put a bow on it, Carol, the Dow, the S&P 500 finishing the week higher by 0.5 percentage point. And we're also seeing that the NASDAQ even eking out a gain on the week.
I'm already looking forward to earnings, which I just pulled up JP Morgan on the Bloomberg, and they report October 13th. So we'll get a new earnings season, and we'll get some clarity, and we'll see what CEOs have to say about everything. That's how it goes. All right, also how it goes is it's time for World and National News, and let's go to 99.1 Newsroom in the nation's capital, and Nancy Lyons. Hey, Nance.
Hey, Carol. Homeland Security Secretary Alejandro Mayorkas says the makeshift migrant camp that had been housing thousands of people, mostly Haitians, under a bridge in Del Rio, Texas, well, it's been cleared. He says about 2,000 Haitian migrants have been expelled on flights, while thousands of other migrants returned to Mexico or are awaiting U.S. Immigration Court proceedings. He says those horse patrols have been suspended and an investigation is underway into Border Patrol agents on horseback.
Let me be clear. The department does not tolerate any mistreatment of any migrant and will not tolerate any violation of its values, principles, and ethics.
Mayorkas says the U.S. continues to study conditions in Haiti, and even though it's recovering from an earthquake, he says officials have determined it is capable of receiving individuals. The CDC director says distributing booster shots will help bring the coronavirus pandemic to an end. Rochelle Walensky says those over 65 who have received 2 doses of the Pfizer vaccine are eligible for a 3rd dose. California authorities say they've arrested a 30-year-old Palo Alto woman on suspicion of starting the ongoing Fawn Fire, currently blazing through thousands of acres outside Redding. CAL FIRE Shasta Unit Battalion Chief J.D. Sulliger.
He was determined to have been in the area when firefighters were working to contain the fire on the ridge line above.
Sulliger says an eyewitness reported the suspect acting, quote, strangely. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser along with Tim Stenovic in our Interactive Brokers studio. This story catching my attention. Tim, I'm assuming you do too. I know you do because we talk about the airline industry, and You've been on a plane. I'm getting ready to go on a plane in a few weeks for the first time in almost 2 years.
You and I are going to be on that plane together.
I know.
I think. Is that the plane you're talking about?
Yes, I am. I am. And there's a story in the Washington Post about Delta Airlines calling for an industry-wide effort to keep passengers from boarding competitors' flights after being banned for disruptive behavior.
Yeah, check out the story. It's in the Washington Post. It's written by Michael Laris. You can find it on the Bloomberg Terminal and on the Washington Post website and in the paper. So I'm reading right from this because he writes it the best. So far this year, Delta says it has submitted the names of more than 600 banned passengers to the FAA, which has sought to enforce rules against interfering with flight crews. You've seen the videos. I don't want to say throughout the pandemic, but like when people started traveling again, and we've heard from different airlines that they're suspending alcohol service on certain segments or certain domestic flights as a result of unruly passengers.
Right. And the company did not say whether sharing of passenger lists should be through the federal government or among companies themselves. Declined to elaborate. Delta says it has more than 1,600 people on its internal no-fly list, did not clarify why it submitted fewer than that to the FAA. I have talked with someone who has been a flight attendant, overseeing other flight attendants for many years, also a senior airline executive, and just said it's kind of crazy what's going on and what flight attendants are being asked to do. And the pilots are locked in.
Yeah.
And they don't open the door.
Which is by design.
By design, but it also means pilots can't get involved, and so it's left to flight attendants to figure it out.
Be good.
Just
people.
be good. Come
like,
on.
You know what? We're all trying to get through this. We're all trying to get by.
Yeah.
And plus, everyone's got a smartphone, okay? So you're going to be on the internet.
Exactly.
All right, more on that. And Carol, hopefully you don't get stopped at the gate when we head out there.
Fingers crossed.
All right. Well, coming up, if you're listening in New York, Washington, D.C., or San Francisco, we're going to take you to the Whistling Pines Golf Course in Wisconsin for live play-by-play of the Ryder Cup. This is Bloomberg Radio.
And check out our Business Week weekend show featuring Evergrande and the economic turmoil in China, Cisco's initiatives on climate change, and the CEO of Rocket Lab. That's Bloomberg Business Week, Saturday at 8 a.m. on Bloomberg Radio and on our podcast feed, Bloomberg.com.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Late day rebound for the U.S. stock market. The Dow, the S&P did move higher, but NASDAQ had a down session for all the turmoil in global markets earlier in the week. Stocks did manage to stay in the green. Traders shrugging off concerns over a Federal Reserve pullback in stimulus, contagion risks from distressed developer China Evergrande Group, and Beijing's latest crackdown on cryptocurrencies. Bitcoin today falling almost 5% to 42,496. S&P up 6, a gain there of about 0.1%. The Dow higher by 33, up 0.1%. NASDAQ down 4, a drop of less than 0.1%. 10-year yield 1.45%. Spot gold up 0.3%, $17.47 the ounce, and West Texas Intermediate crude up 0.9%, $73.93 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So,
did you get your new iPhone, Carol?
I did get one earlier this year. Now I'm wondering, shoot, I had to because it was cracked.
Okay, Mark isn't even going to get involved in this conversation because
He's not.
You don't need a whole new phone if your phone is cracked.
Oh,
but this will be a different.
I was afraid it was going to get cut.
Okay.
First of all, though, we want to talk about Alexa.
Yes.
How about some new devices and services for Amazon? Because that's exactly what's coming up. Let's get to Mark Gurman. He is Bloomberg News technology reporter on the phone in LA. How are you?
Hello, hello. I want to talk about the iPhone as well.
You do? Oh, you do or you don't?
I do. I have one right in front of me. I have opinions.
The brand new one?
Amazon.
No, okay.
I have the brand new one. Let's talk Amazon first.
All right, let's get that out of the way. We can cross it off the list. What do we need to know here?
Okay, Tuesday, Amazon is holding one of its annual, launch events for new Echoes and new services and software and all that. So things to know. Big one is a new giant Echo for your wall. I don't know what it's called, probably the Echo Wall or something like that, or they'll call it the Echo Show 15-inch.
How big?
Yeah, 15-inch. It's like the same as my laptop. Anyways, use it in the kitchen TV type of thing on your counter, put it on your wall, display photos, check your weather, packages, all sorts of stuff, control your smart home appliances. It's going to be a hot seller, I think. Other stuff they're working on is a new sound bar for TVs. Obviously, they just launched new TVs recently. Soundbar is probably not coming next week, a little later on.
But in time for the holiday season, Mark?
I don't think so. I don't think so. This is still pretty early on. Then they're exploring a bunch of stuff like new Echoes for next year. The redesigns happened last year, so they're sort of on a 2-year cadence on new designs and major new features. You'll see a new car device. The Echo Auto, the first one was a total flop. That allowed you to turn your speakers in your car into basically Alexa controlled. They'll do a new one of those that better connects your phone to charge it up. And they're exploring some other stuff like wearables for kids and senior citizens, new chips, a better conversions for the operating systems on the Fire TV and the Echoes. And then the big one is the home robot, codenamed Vesta.
I'm so glad you got there. I just said to Tim, I'm like, when is he going to get to the robot?
Well, my question is, when is Amazon going to get to the robot? Not so much when I'm going to get to the robot. We've been writing about this robot for 3.5 years at this point, right? That tells you how long I've been writing about Amazon now, right? 3.5 years, still hasn't come out. Will it come out next week? Will it be announced next week? Maybe. There's a lot of internal doubt, even from Jeff Bezos, about this product, and we'll see. If anyone's willing to come out with a low-volume, very expensive piece of technology just to show off their abilities in computer vision and such, it would be Amazon. So I wouldn't be shocked.
Okay. All right. Well, let's move on to talk iPhones because Mark, I know you camped out overnight, you waited in line.
He's a VIP man. They probably hand delivered it on a silver
I'm saying
platter.
this for a reason, Carol. I'm saying this for a reason.
Oh, okay.
Was any of that there when you went and bought the new iPhone today? Were people lined up?
I went to the Apple Store in Los Angeles, the Century City Mall. It's one of their newer flagship stores in a pretty popular area, and I got there way too early. So I for some reason showed up at around 6:30 a.m. There was no one there. I came back around 7:30, and I was like the 5th person in line. So I would say there was fewer than 10 people there, fewer than 15 people there, 20 minutes before opening at 8 a.m. Then the line started pouring in around 8 a.m., 8:30 a.m.
You've covered it, Mark, you've covered this your entire career. What does this tell you about demand, or is it not a fair way to look at demand given the online sales and given what's happening with the way that people are buying phones differently?
It tells me nothing because last year the stores were shut for the most part, and the iPhone 12 came out, and they had a $100 billion plus quarter. So it means basically nothing to me, right? Gone are the days of people lining up. I mean, I can tell you something. At this same mall, maybe, 10 years ago, when you would line up for a new iPhone launch, the lines would be 500, 600 people before the store opened. Those days are long gone.
You used to see that on the store on Fifth Avenue. I would come in really early in the morning and people would be lined up, camped out there.
I used to go cover this for different jobs, and there'd be satellite trucks out there and very well-known international reporters reporting on it. People from traveled all over the world to get one from the U.S.
So you've been playing with the phone, right?
Been playing with the phone. I can tell you straight up, if you have an iPhone 12 from last year, you don't need this device, right? Besides covering it and needing the phone, if I was just a logical consumer, I would get it because I am basically going to profit like $30 from getting the new phone because some of these carrier deals are so aggressive. T-Mobile is offering about $1,300 if you have a Pro Max from last year. That's about the price of this phone in change.
Say that again. I have an iPhone 12 Pro Max.
So if you have a 12 Pro Max and it's on T-Mobile, you can get $1,290 for that phone. So you get $790 in credit from Apple that goes as a refund to the purchase. So you buy the phone full price, then you give Apple your phone, and then they'll issue you a refund for $790 if your phone is in certain conditions, obviously. And then T-Mobile will give you another $500 in credit spread over 24 months on your bill. So that comes out to $1,290 total. The phone, that's, probably $100 profit depending on the storage capacity you got. So I got this phone for free, and I think there's other people who are going to get it for free as well. So that's the only situation I can tell you that it would be worth upgrading from the 12 to 13.
30 seconds. That's all the time we have. Mark, tell us why they're being so aggressive, the carriers.
Well, I think one of the reasons they're being aggressive is because there's no new design and no major new features to drive upgrades, right? Last year you had new design in 5G. This year you have a higher refresh rate and camera features that could have very well been software updates to last year's hardware. So they have to do it.
It's something when Mark Gurman talks more about the lack of lines and how the trade-in and the money value, you basically can get the phone for free rather than the functions. That says something. Mark Gurman, have a great weekend. Tech reporter at Bloomberg News, a must-read on Twitter and everywhere else at Mark Gurman. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. Carol Massar along with Tim Stenevec. Coming up, if you're feeling a little overwhelmed, how could you not, probably? We have an interesting guest coming up, Juliet Funt. She's got her own company. She's got a new book out. It's called A Minute to Think.
That's what I need.
How often do you use your Calm meditation app?
Like, I'll sign up for it, and then I'll use it for 2 days in a row, and then I'll never open it again.
That's not really using it.
I know. I'm just being honest.
All right, this is all coming up. Let's get on over to someone who's always calm, deals with pressure so well, stress so well, Charlie Pellet.
Exactly. Just ask my wife and kid. And how's that for a Freudian slip? Ask my mom.
Hey, you said it, Charlie. I was thinking it.
Here's what's going on. The Dow, the S&P, they're both higher. NASDAQ on the minus side. And for all the turmoil in global markets earlier in the week, stocks managed to stay in the green. Turned out to be a winning week for the S&P 500 index. This week up by about 0.5%. S&P up 6 today, ending the week, heading into the weekend at 44.55, up by about 0.1%. The Dow up 33, higher by 0.1%. NASDAQ fell 4, lower by less than 0.1%. 10-year down 6/30 seconds. 10-year yield 1.45%. 1.45 on the 10-year. Gold up 0.3%. 17.47. West Texas Intermediate crude up 0.9%. 73.96 for a barrel of WTI. Turns out that crypto was a major market story today. Traders this week did shrug off concerns over a Federal Reserve pullback in stimulus, contagion, and risks from distressed developer China Evergrande Group and Beijing's latest crackdown on cryptocurrencies. Today, Bitcoin down by 4.8%, 42,552 on Bitcoin. Stay with Bloomberg to find out what happens with Bitcoin over the weekend. Well, crypto enthusiasts would do well to embrace government regulation of the industry, according to former U.S. Treasury Secretary Larry Summers. Given the large financial sums involved in crypto, Summers says it's unrealistic for the industry to expect to operate in secrecy without government oversight. He was interviewed on Bloomberg Wall Street Week.
And we have large financial sums happening in secret. You have risks of money laundering, risks of supporting various kinds of criminal activities, risks of innocent people being ripped off.
And you can hear more of that conversation with Larry Summers coming up at 6 o'clock right here on Wall Street Week with David Weston, 6 o'clock Wall Street time here on Bloomberg Radio. S&P, as I mentioned, higher by 6 today, up by about 0.1%. 10-year yield 1.44% right now. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the pandemic has upended, Tim, we know how we work, where we work, how bosses and workers think about the process. Sometimes process was overwhelming, boundaries between work and life were unclear. Sometimes the ability to just plow through without office distractions, not having to commute and so on, created some clarity. So I'm guessing our next guest has something to say.
It's Juliet Fund, founder and CEO of the Juliet Fund Group, and she joins us on the phone from Los Angeles. Juliet's new book is called A Minute to Think, Reclaim Creativity, Conquer Busyness, and Do Your Best Work. Juliet, thanks so much for joining us on the show. What was it about the pandemic and everything that we've been through collectively, and how it's contributed that prompted you to write this?
Well, I wrote the book before the pandemic, but the conditions of the pandemic have only amplified things that have been around in work for decades. I've been watching people for many, many years sit in tolerated misery of the day, just trying to get through an earnest day's work and finding that it becomes the hardest part of their day. Unnecessary work, emails, meetings, decks, reports, a lack of connecting with meaning. These things have been around for a while before the pandemic, but the pandemic has certainly amplified them.
Well, and it's interesting. I was going to ask you, too, about your company and what you were doing pre-pandemic. Tell us a little bit more about your consultancy and training firm. And, again, going back to kind of pre-pandemic and maybe how your thinking has changed a little bit.
Sure. We've been doing this work for about 10 years, and I did it 10 years before that as a speaker and consultant independently. We go into companies, we help them to reduce wasteful work and basically find more time to be thoughtful, strategic, connected. And the pandemic has been such a fascinating amplification of the worst of work in certain ways, but also has given us a little tiny taste of what's possible with giving people more liberty, that when they do have flexibility and liberty, that there are ways that work can feel different in ways that we haven't touched in a really, really long time. It's a preview of what's possible if we use this window of opportunity to redesign the way work feels.
Well, I want to follow up on that. Tim and I've had a lot of conversations with heads of companies, well-known companies, publicly traded companies. In fact, we were just talking with Fran Kasudas of Cisco Systems yesterday, who is an executive VP, chief people policy and purpose officer, and talking about hybrid work in particular. Do you think that seeing how productive people can be and maybe happier in terms of having some flexibility in how they work, that this idea of kind of being more liberal and opening up how we think about work, does it stay with us? Because there's a lot of executives who've got some pretty expensive office space who say, I want you back in the office.
Sure, we have to look at both populations of the pandemic evenly and fairly. There has been a population that's tasted a little bit of liberty, and they're starting to realize that work can feel different with the freedom that they've been given. But there's also an enormous percentage of people for whom work has gotten worse, in the sense that they've lost any semblance of boundaries that they had before. They used to have a little bit of separation maybe between work and life, and now it's just shuffled like a deck of cards, and there is no separation. They don't know how to turn on or off. The Zoomaholic Zoomathon all day long has literally expanded to 7 a.m. to 7 p.m., so it's unsustainable, and we have to address both sides of that.
Okay, here in New York on Wall Street, it's just 20 minutes before 5 roughly. What's one tip you can give us to help us go into the weekend and sort of enter and stay unplugged?
Sure. Entering the weekend, we want to, first of all, have a way to close the door on work. It's very, very difficult. One technique is to take all of your work-related things and put them inside some sort of physical compartment, a desk, a drawer, a dresser, so that you can't visually keep seeing them through the time when you're supposed to be disconnected. Another incredibly simple technique, although it sounds a little lighthearted, is if you just say out loud in front of the people that you love, I call this trapping yourself in a promise. You say, well, I'm done for the weekend. No more work for me this weekend. And once you say out loud that you've made a commitment that there'll be a boundary between work and leisure, it's really hard to go sneak that sip of the laptop. You can do this even alone. If you live alone, you can have a boundary buddy and just text each other and say work is over.
Really wonderful. Hope we can get you back in the future, because some really great tips. And you're someone who works with Spotify, Nike, Costco, Cisco, the Food Cisco, ESPN, so many companies. Juliet Funt, founder and CEO of Juliet Funt Group. Her book is A Minute to Think, Reclaim Creativity, Conquer Busyness, and Do Your Best Work.
Well, let's get to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is there standing by. Hey there, Nance.
Hey, Tim. President Biden is urging Americans older than 65 or with health or work conditions that put them at risk to get a Pfizer booster dose that's now been authorized by CDC Director Rochelle Walensky.
The president said he expects the booster green light will soon apply to all American adults, as well as the other vaccines.
60 million Americans are now eligible for a booster 6 months after their second shot. The booster shot is free and easily accessible in 80,000 locations. If you've got the Pfizer vaccine, go get the booster.
The president said 182 million Americans have now been fully vaccinated, and the 70 million who have held back are jeopardizing their families, healthcare facilities, and the economic recovery. In Washington, Irv Chapman, Bloomberg Radio.
Homeland Security Secretary Alejandro Mayorkas says no individuals remain at the migrant camp in Del Rio, Texas. He says there have been 17 expulsion flights returning migrants to Haiti. He says about 12,400 people will have their cases heard in the U.S. He's also addressed those videos showing Haitians being pushed back by customs agents.
The images horrified us in terms of what they suggest and what they conjure up in terms of not only our nation's history, but unfortunately the fact that that page of history has not been turned entirely.
New York says they're dealing with a broken immigration system. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You are listening, of course, to the Friday edition of Bloomberg Business Week. Carol Masser, Tim Stenovec, and there's a couple of stories we want to bring to you, including one that's now the most read story on the Bloomberg in the past 60 minutes.
Is this one Michael Burr?
It's Michael Burr.
Okay,
sorry.
that's what I thought.
Sounds like.
Yeah.
It just crossed.
It did.
It caught our attention.
Yeah, this one playing out on Twitter as well as we speak. Michael
Yeah.
Burry of The Big Short fame says that he received a subpoena from the SEC over GameStop, and he actually sent this out over Twitter. He said, so who got an SEC subpoena over ticker GME, that's GameStop? He said, actually, I know who. They're on my subpoena. And then he says, with all that's going on in the world, ... and includes an image of the letter that he got from the SEC.
And as our reporting reminds everybody, his bullish stance on GameStop back in 2019 helped lay the foundations for that retail investor frenzy that we talked a lot about. And again, saying that he got the subpoena from the SEC as part of an investigation involving the company. Stay tuned.
Yeah, to be continued.
Well, that whole retail trading investor frenzy, right? Still being looked into and still a lot to figure out.
And some of those companies are still higher.
I know. I mean, gainers, they're often coming up on the list. We see them trading with some wicked swings. In the meantime, also, I think among our most read, on the Bloomberg, is a story by our Patrick Clark about Zillow being caught up in a TikTok drama over big money role in housing. So a video posted by a real estate agent in Las Vegas claiming a company was pulling off a convoluted scheme to manipulate housing prices. It's gone viral.
Well, to understand why the video went viral on social media, it does help to think about the state of the U.S. housing market. We've talked about it a lot on the show, Carol, where the pandemic unleashed demand that has swamped available inventory in both the for sale and as well the rental markets.
I mean, this is one of the big stories, and there's a lot here, and you should really check it out at Bloomberg.com or on the Bloomberg. But, you know, the whole real estate craze this year.
They're getting accused of home flipping, which is increasingly what their business is.
Okay. And so we'll see what happens, I guess. All right, we're running out of time, so you got to check it out at Bloomberg.com. This is Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It turned out to be an up Friday for the Dow and the S&P. Down day, but we did have an up week as well for the S&P 500 index. On the week, the S&P up by 0.5%. The Dow, despite all of the turmoil earlier in the week, the Dow ended the week with a gain of 0.6%. S&P up 6 points today, higher by 0.1%. We had the S&P finishing the week heading into the weekend at 44.55. The Dow up 33, up 0.1%. NASDAQ down 4 today, a drop there of less than 0.1%. 10-year yield 1.45%. Spot gold up 0.3%, 17.48 the ounce, and West Texas Intermediate crude up 9 tenths, 73.97 a barrel. Amazon's Whole Foods Market is implementing a grocery delivery fee across the U.S., rolling back a perk the retailer had offered for paying Prime members since it began offering home delivery from the organic grocer. Recapping, stocks higher, S&P up 6, a gain of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Every new watch is like a new piece of art. It has a different story to tell.
Italian wines as a whole really speak to that quintessential need.
It is the most powerful car made in the U.S., period.
You get the beautiful interior, the iconic design.
It's very chic and posh.
Even if you pay for it, it's something that money can't get.
All right, everybody, we thought the best way to wrap up what's been a wacky week is to bring in our own Chris Rausser, who is editor of Pursuits, our luxury brand here at Bloomberg News, because we've got a couple of interesting stories. Chris joins us in our interactive broker studio. It's been a wacky week.
It has been a wacky week.
Based on the phone call you were just talking about me, it was a really wacky week. All right, so let's talk about, as things get back to normal, we are seeing it, restaurant owners fighting to keep their outdoor dining sheds. I have to say, my fingers have been crossed that this stays with us, so tell me what's going on. Kate Crater writing about this.
Yeah, so Kate, our restaurants editor, is so in touch with all the restaurant owners in New York, and it's so close to her heart. And this is a really interesting issue because it's not universal that people want this to stay.
Them.
Some people hate the outdoor dining shelters.
I will bring up an opposing opinion.
Yeah.
Not that it's mine, but I will bring one up.
Okay.
Don't worry.
And right now, the Open Streets program has been extended to the end of 2022, so there's a little bit of a breathing room. And de Blasio has proposed making it permanent, and City Council has to approve that. But basically, restaurants now are going back into that. It's getting cooler now, and they're going back into that time where you remember in the winter you would go outside, you'd sit outside because you felt like you had to. Your feet would be cold while you're eating dinner. You never think about your feet being cold at a restaurant. Right. And restaurants are like, this saved 100,000 jobs. Like, we need these to be permanent. And so this is really top of mind right now for restaurants.
Because people took advantage of it. I mean, they wanted to be at restaurants and they would go outside.
Yeah, and it saved more than 10,000 businesses. Yeah. So this is a really big deal.
Okay, what do critics say about it? I'll just say a few weeks ago I was walking by one and...
Did you trip over something,
a few rats made their way through the area where people were eating, and it really disturbed the people who were eating, and they kind of freaked out. And I said, hey, this is New York City. This is outdoor dining.
Yeah, we live in a rat maze.
That's New York.
It's just part of it. People think that it really disturbs the aesthetics of the city. You're eating quite close to the street sometimes because they're in the parking lane.
That is a little scary.
And people think it's just the city's not designed for this necessarily. But the restaurant owners have invested a lot of money in these shelters. On average, they cost $25,000. We talked to a restaurant owner in Soho who spent $180,000 on his. I mean, it's quite a beautiful one with flowers and everything. Yeah. Andrew Carmelini, you might know Lafayette or La Conde Verde. He spent $250,000 on those. That's a lot of investment that might go away in a year.
How do you guys feel about it?
I'm into it. I like it.
I love it.
I really like it.
I think
it's very quaint and very European.
I was just going to say very European. It's if this works so well in other cities, why can't it work here?
We can make it look better, too.
Exactly.
I mean, a lot of them are really hastily assembled, but think of all the cafes in Paris where you're sitting along the side of the restaurant facing out. It's just like a beautiful way of experiencing it. In my neighborhood in Fort Greene in Brooklyn, it's made the whole neighborhood feel much more alive.
I'm in downtown Jersey City, and the same thing. And we have an actually restaurant street, I should say. But the outside, it's just made it so much more charming. And I think also given them more tables to play with in what's been a tough environment.
The restaurants in my neighborhood are like 3 times larger than
Can you give us a prediction on what happens? Can you give us a prediction on what happens?
I mean, I think the city council will make some version of it permanent. Cars and drivers are not like the most popular constituency here in New York.
I say it to like Uber drivers, and like, I hate it, or just drivers in general.
Yeah.
And I'm looking at Ari. What do you think, Ari? Thumbs up? He says thumbs down. Yeah.
Yeah.
He's kidding.
Thumbs up though when it comes to Kate Moss and her quirky car collection.
Her cars.
I was obsessed with this story when it hit the terminal by Hannah Elliott.
Yeah, so Hannah is our car columnist, and she knows everything about cars, and especially classic cars. She herself owns a vintage Rolls-Royce extended wheelbase,
Of course
and
she
it is
does.
so cool. Anyway, Kate Moss had one of her classic cars, which she has many, break down on one of the big highways outside of London.
That's what they do.
It was a little MG, a very cute MG midget, and it got towed and whatever. But of course, there was a little coverage, and so we were like, let's look back at some of her other cars. Now, those MGs, which to me, when I see one, I'm like, oh, this is so fancy. One day maybe I could afford them. The average running MG costs $5,000.
That's
it's
what
not
shocked me.
Actually that expensive to buy one. And she has an
It's
old...
the towing, though, that's expensive.
well, first of all, yeah, you own it. The cost really comes... You own any of these classic cars, the cost comes in the maintenance and repairs. But she took her driver's test in an old Mini Coupe, which she then gave to her daughter, I think on her daughter's 21st birthday. She has a couple of old vintage...
Wait, why did she need to take a driver's test?
I don't know. It just
To get a license, perhaps?
Yeah, but...
Maybe she didn't have it.
Okay, maybe she didn't have it.
She was a pretty successful model, young, early on. Maybe she was...
famously, for years, I don't know if you remember, she drove a black cab. She drove like a London... It's like Fran Lebowitz, but in London, she drove a black cab. And she has a couple of old Rolls Royces like Hannah. And the great thing about her is that these are not like insanely expensive cars. They're expensive to me, but they're not wildly outrageous, and she drives them. You see her driving around, like she picks up friends in them. She drove home from her wedding in one of the Rolls Royces. Like, they get used.
What do we know about what she likes about this collection?
Yeah, I mean, she likes kind of workaday cars. I mean, people give her some fancy cars. Someone gave her a black Porsche 911 from the 70s. Yeah, same. And so, like, that's not, that's like giving someone a puppy for their birthday. You're like, oh, thanks. This is kind of a lot of responsibility.
Exactly.
But anyone who's driving around an old Rolls Royce loves vintage cars, because that's going to be something that you're going to have a lot of maintenance for.
I have to say, though, reading this story, and I will be quite honest, we read it in the morning, and I've got to read all the Evergrande stories and what's going on in China. This story hit, and I was like, I dropped everything and read it from start to finish. But it really struck me, because I think about the car, so many of the cars that Hannah covers, right? It's like hundreds of thousands of dollars or millions of dollars. And this collection, while there's a few there, it wasn't so expensive. That really, really struck me.
Yeah, her little Mini from the 60s was $12,000.
Yeah, so not so much. All right.
Which one would you want?
Oh,
Chris?
I really like... She has a couple of these Mercedes SLs from the 70s, and I really love that look.
But where are you going to keep it in Brooklyn?
Oh, stop.
Where am I going to keep any car in Brooklyn? Where am I going to keep the car I already have in Brooklyn?
Exactly. I love old Mercedes.
Yeah,
like the convertibles and stuff. There's just a look about them and stuff. Thank you so much. We needed you to wrap up this week, because it was a tough one. Chris Rouser. Check out everything at Bloomberg Pursuits, and you can check out Chris also on Twitter. Chris, of course, editor of Bloomberg Pursuits. Thank you.
Check out everything at Bloomberg.com as well, and in the issues of Bloomberg Business Week as well, the Pursuit section, one of our favorites.
And be sure to check out our Bloomberg Business Week weekend show. You can find it on our podcast feed at Bloomberg.com. Also on Bloomberg Radio, that's at 8 a.m. Wall Street time. Even though the market's closed, we still do Wall Street time on Saturdays.
What's the pizza you're having tonight?
Eggplant pizza, double dose, crisp crust.
Okay, and you're saying the invitation to pizza night is in the mail?
No, for no one.
Okay.
For no one. Don't you have pizza? Do you do pizza on Friday nights?
Not on Fridays, but I do pizza.
We do pizza on Friday nights too.
You see?
Yeah.
What kind of pizza
Margarita.
for you?
Same thing every week.
Okay, there we go. Everybody have a great, safe weekend. For the whole Bloomberg Business Week team, we love them. I'm Carol Massar with Tim Stanovic. This is Bloomberg.